and ongoing education side of things. And, now we're wanting to reopen up the community, introduce, more serious traders who are looking to take their trading to the next level. So I sincerely want to thank everyone for being able to join and participate in this boot camp. As I know, the time commitment, is not, it's not just a few hours, right? It's going to be 20, 25 hours. All of our previous boot camps, especially our last one, ended up being 30 hours. So there's been a lot of, internally, there's been a lot of additions that have been made to the actual platform, inclusive of the course that you guys will be gaining access to. And the boot camp is now going to be styled a much shorter version. Let me go ahead and actually take this off. Let me see, just so everyone knows, for all note taking, please write it down on a piece of paper next to you. I will be we will be going over the rules and expectations of the boot camp, of the community, here in just a few moments. But having a sheet of paper to write down everything is imperative, as no phones right during the boot camp. That goes without saying. We've already talked about it. We will talk about it. But it's very important to keep a sheet of paper next to you to write out your notes old school way. And more importantly is all the diagrams, all of the approaches, the drawings that you guys are going to be making. You want to make them as detailed as possible. So please, again, I encourage everyone, do not use your phones. Just have a piece of paper right up down next to you. If you need a few moments to grab a piece of paper, you have the time, because we're just about to go through all the introductory maintenance overview material right before going into the education. All right, let me just go ahead and take this. That's fine. Just make sure you guys communicate with the admins of this call. All right, so any admins of the call, if you need anything, message them directly. Don't post it in the chat. Also, everyone, please avoid using the chat during the boot camp. I don't want to have to turn it off and keep turning it on. So only use the chat when questions are asked. If you need anything personally, please message the admins. All right, everyone. Well, again, welcome. I'm really excited. I don't want to take up too much time starting on the first slide because we have a lot to go through. So let's go ahead and get right into it. All right, everyone. Welcome to Dreams FX officially. I'm glad all new students are able to join, previous students as well. And I'm just going to play a quick message for myself for you guys.
Hey, Griffin, can you hear the video?
How grateful I am as you're about to embark on your new journey of trading, becoming not just a profitable and consistent trader, but really becoming the 1% as you're turning your dreams to reality. And here at Dreams FX, we're not only providing you the revolutionary ideology to understand how the markets actually work by the central bank algorithm, but most importantly, we're providing you the necessary plan, showing you how to turn a dream into a deadline as it becomes a goal. And this bootcamp is going to expose you to the opportunities and the limitless expectations that the market provides every single day. So thank you guys for joining. I'm so excited. Enjoy the boot camp, and I look forward to having all of you guys in the community. All right, everyone. So again, formally welcome. I'm very excited, and I know that quite a bunch. We have quite a lot to go through today. So let's go ahead and, as I mentioned, get right into it. All right. So first things first. So welcome to Dreams FX family, everyone. So what exactly is our mission? So we are here to really have an impact on the global education and all financial markets. What we do does not just apply to Forex specifically. Now, what we do focus on is Forex, but this all of what you're going to learn applies to any market that, as long as you have readable price action, it's the operations of all markets. So futures, cryptos, stocks, equities, anything that moves on a chart, all is based on this knowledge that you're going to be learning. Specifically, we are specializing in developing the 1% of traders. As you guys know, this is not it's not an easy course. It's not just to do this, and you're done, right? This is the next level of comprehension, understanding, really taking your analysis to the next level, but also your mindset, because oftentimes everyone in the markets, they're always focused on the strategy. But if your strategy or your analytical skill set is all the way up here and your psychology is not on par with it, you're never going to make the results that you want. So being a mastermind is more than just, oh, I know this, this, and this, or ping-ponging, as you guys are going to realize. That's not being a mastermind. But with that being said, we want to have and transform you guys not into traders, but thinking like portfolio managers and being able to have the skill set analytically of a complete professional. So more so, everyone, whoever falls into Forex initially, me being one of them 5 years ago, you fall into the trap of being sold a dream. This is what can happen. You can flip accounts, make all this money. But as you guys have known, if you've had the extensive experience by now, you were being sold a dream. And now our goal is to not sell you a dream, but provide you the necessary tools and equipment, showing you how to turn that dream into your own reality, as I have done it, as we've had a few students themselves who are already on their mission and really starting to have huge impact on their lives, their families' lives, and just showing the true possibilities and potential. Because anyone in the world is able to trade. And there's no discrimination. If you're in Africa, if you're in India, if you're in any even third world country where there's not the opportunity, everyone has equal opportunity in the market as long as you have a willing mindset and the ambition to get there, right? What's our vision? Our vision is, again, to become a global education empire that over years and years in time will give everyone around the world the opportunity to become financially literate and have the opportunity to escape the mainstream system, especially like we've talked about with work, with payment, everyone all around the world, currency and exchange rates being a lot different. Here in America, you would earn more here maybe than in Venezuela and Colombia, other countries whose, monies doesn't go a long way. Trading, by showing everyone around the world what is possible when it starts with trading, long-term investing, this is how you're going to slowly and over time accumulate wealth and start achieving all those things that you want. And all of us here at the end of the day are here for a specific reason, and money is just a byproduct of the skill set that you guys are going to be learning that's going to allow you to spend time with your families, open that business you've always wanted to run, if whatever it might be. That's our goal for you. So our emphasis is to ensure top quality to aid all of you guys and success, the retainment and the expansion of continuous innovation. It's never always going to be the same. And for our current members and for our future members who want to know, we are still in our infancy stages. There's so much coming. And, we've now been, as of next month, it will be a year that we've been established. This isn't going to be 1 year, 2 year project. It's going to be ongoing. And as you guys get closer and, as soon as you get through the boot camp, you're going to realize that there's a whole ongoing process. And we're really trying to have a profound effect on the industry. So with that being said, we are not the standard. We're not comparing anyone else to us. We're setting a new standard, a new expectation for traders who really want to make it, knowing what it takes to get where you want to be. So exactly, who am I, right? What's my experience? What are the foundations of Dreams FX? What are my credentials, right? So everyone at this point should know who I am, as I've talked to every single one of you, right? My name is Griffin Starcher, right? I'm the CEO of Dreams FX, and Dreams FX was initially founded in 2018. For those who do know my story, you guys can just listen. For those who do not know my story, I started trading in 2018. Late 2017, 2018 is where I really took my trading to the next level, and that's where I became a full-time trader. When I first started trading, I found out about trading the opportunities. Oh, you can get rich quick, blah, blah, blah. At that point, I was 17 and I was like, I really want to make some money. So I found out about trading. I'd worked the whole summer before going into university as a lifeguard, trying to save up as much money as I could, working 60 hours a week. I made $4,000 over that entire summer. My first week of college, I found out about really the true capabilities of trading, as that was the first time I was exposed to someone really doing a massive flip. And I was like, dang, I really, I've always wanted money. I was like, I really want to do this. So that second week of college, being in university, I put in that $4,000 into my trading account. And I was like, wow, I'm going to make it. I'm going to do everything. Mind you, no idea what I was doing as it normally goes, right? And that being said, over the course of that next week, I ended up losing everything that I had. So at this point, I'm 3 weeks into college. I had no money, and my parents had saved up money for me, my twin brother, and my sisters to go to university. Well, the day after I blew my account, mind you, my parents not having any clue that I was trading, my dad said, I'm going to liquidate your college fund. I'm done with college, and he's, at that point been on my life. I was out of state college. It was $52,000 for my first year, and I had $0 to my name and no loans. And I'd worked my entire life up to get to my dream school at this point, and I was finally there. So 3 weeks into school, no money. I was just told that my school was going to be paid for, and I knew I had to figure out an effing way to do it. I figured out that if I can lose $4,000, I can make $4,000. I asked my aunt for $50 for grocery money. I put that into an account. I found a really good mentor at the time, only trading indicators, oscillators, momentums, volumes, everything, right? And over the course of the next 3 months, after I put that $50 in, my first month turned it into $10,000. My second month, $100,000. By the fourth month, I made my first $1 million. At that point, I went from zero to my own personal hero with no help, no one, sleeping an hour and a half a day, teaching myself my own classes because I wanted it more than anybody else. At that point in time, I was by myself, and I knew whatever I wanted to achieve. It all starts with a dream, and that's where Dreams Effect started back in 2018. Over the course of the next year and a half, I grew my own personal portfolio to $3.2 million. And I was riding on highs, was able to pay for my college the first 3 years of my college. And I was like, I'm exactly where I want to be. I'm so happy. I worked so hard. It was great. COVID came around. And at that point, I was very heavy into gold. I loved gold. And I had no understanding of risk management, absolutely none. I would just literally exponentially compound my account every single time I was in a trade, taking anywhere between 30 to 70% drawdown on those large accounts at any given point, trusting that it would just end up working out, which it did until it didn't. And that's where gold came around. And I decided, I could really make some retirement money being 18 years old, 19 years old, that I could just, I could make it. I could just do whatever I want to do. So I ended up deciding to risk 90% of my portfolio on gold with the monies that was at hand. And in 3 weeks, I blew that $3.2 million down to $30,000. And that's where I realized I had really effed up. I let my own head, my own ego get to myself. At this point, going into my third year at university. And then a month after that, I lost everything. 19 years old, that I could just, I could make it. I could just do whatever I want to do. So I ended up deciding to risk 90% of my portfolio on gold with the monies that was at hand. And in 3 weeks, I blew that $3.2 million down to $30,000. And that's where I realized I had really effed up. I let my own head, my own ego get to myself. At this point, going into my third year at university. And then a month after that, I lost everything. I lost everything I ever had after I paid for all my school. So I had to drop out. I became homeless, and no family, no friends, no nothing. With the same backpack that I have right next to me, I was sleeping on the beaches, on the middle of literally sleeping on a beach for 2 months straight, every single night, nothing to my name, no parents, no family, no friends. And I realized, looking up at the stars, that, I have two options in this scenario. You either give in and let everyone tell you that they were always right, or you can be the hero of your own story. You can understand what it takes to achieve greatness. And I understood at that point in time, it's your mindset. Everything is you're capable of more than you think, but you need to put your mind to it. So at that point, I realized the only way that I'm going to be able to recover from this is by thinking in a way that's going to allow me to. If you're negative, if you attract negative things, you're never going to be able to get where you want to be. You're not going to attract positivity. So over that period of time, I got enough, couple $1,000s over the course of a couple months, working my ass off on a beach, on a pizza parlor on the beach, walking up and down the beach, delivering, saved it up, put it back into my trading account. I'm like, I'm going to do this again. I'm going to learn from all my wrongs, make it right. Every single day, studying my own psychology, exploring the realms of my own consciousness. And since then, I've been able to build my way, back up. And that's where I'm here, is to show people and inspire people that if you have a dream, it's up to you to chase after it. Whether your parents don't believe in you, your friends or your family, none of that shit matters. As long as you believe in yourself, that's all it takes to be great. But if you are always looking for that validation from outside of, yourself, from your parents, family, your friends, they're all going to say you can't do it because they don't know what you're capable of until you actually do it. Now, guess what my family says? Wow, you proved everyone wrong. I'm like, damn right I did, because I'm not just here to exist. I want to live my life on my own terms, and I want it more than anybody else. So that's my story, and that's my reason for Dreams of X, to show people what is possible when you have a winning mindset, when you believe that you can do anything that you put your mind to. And everyone around the world wants to learn how to make money, but very few people actually know how to. So if at least I can provide the opportunity for people around the globe to educate themselves and learn what it really takes to get to the next level, that's my purpose, and that's why I'm here. So that's enough about me. I know you guys want to go straight to the boot camp, but that's just about me and my story, and those are my credentials. So that being said, everyone, that is myself. That is Dreams of X. Started way back in 2018. Officially, as of this year, really starting to have an impact and wanting to go into really global level, different languages, XYZ. So we'll talk about that later on, right? But thank you guys for listening to that. Now let's get right into the overview. So throughout the boot camp and lifetime education that comes afterwards, you can expect to learn the who, the what, the where, why, when, and how of all financial market operations. So understanding exactly where the markets are manipulated, understanding the algorithm, how all moves in the market occur based on the institution's positions, and why all traders are losing, and most importantly, by using those losses to learn how and where to win to become the 1%. As I mentioned, this boot camp is, for the majority of the part, all analytical. The second half of that, the psychological, is going to come in the course when we discover that in the next slide. More so, developing an algorithmic mindset, huge. Not just a winner's mindset, but an algorithmic mindset. And what this is it's going to allow you to process the markets from a rule-based approach based on facts. Understanding that you're not letting your emotions come into play. You're not going to allow any naivety come into it. Understanding how to remove your emotions entirely and follow that strict rule-based system that relies on facts rather than interpreted theory. Of course, learn from a master from an intraday perspective. Ping pong, intraday, swing mastery, XYZ. As we have told students before, if you've ever seen someone ping pong and you're like, oh, that's so cool, I'm here to tell you right now, you will learn how to do that. But if you emphasize on trading that way, you are going to have not only loss rate, but you're not going to be making as much money as you could. That's where I have my own edge. Do I know how to ping pong? Absolutely. But anyone who actually does ping pong does not make money. And then furthermore, does not actually know how to trust the right side of the market and have their own patience. If I were to say to you guys, do hedge funds ping pong? Do institutions or banks ping pong? No, they don't. Well, ping pong. No, they don't, right? When you have capital, when you have serious money to get behind and you're funded, if you have $100, $200, $300,000 in funding, do you need to ping pong the market to make some money? Absolutely not. You just need a few positions, a few trades a week, making those, withdrawals, and you're golden. But why people emphasize so much, ping pong, it's very toxic. That's not how trading's supposed to be. The top traders in the world do not ping pong, but you will still be able to learn how to, just so you know how I specifically trade with my own edge, right? So it doesn't matter what type of trader you are, you're going to be able to excel, because the same strategy applies on all time frames, as you guys have probably now learned from the day one reporting of the May bootcamp. So now your post bootcamp success, right? What's actually included afterwards? As mentioned, everybody, the bootcamp is just the gateway. Absolutely everything cannot be taught in 4 days. It doesn't matter how long it is. Last bootcamp spent 30 hours. Still could not get through everything. There's a ton. So this is not something that you can expect just to learn in 4 days and master it. Or I already know SMC, I'm going to do great. Absolutely not. we've had some traders who have been trading over 10, 13 years, and this is a new approach for them. So it doesn't matter how well you think you interpret or how fast you think you can know something, it becomes completely irrelevant because it's about experiencing everything you're going to be learning in the boot camp and afterwards. So first things first is the mastermind course, right? So the whole A to Z approach, and this is something that we are still working on, especially for the higher end tiers, even some announcements for the new community. But the mastermind course is going to be all concepts covered in the boot camp and not even included in the boot camp in the most extreme detail. So in the mastermind course, there are going to be 5 pillars to becoming a mastermind. The mastermind course doesn't mean you're a mastermind after the course, not in the slightest. You are a boot camp student. To become a mastermind, you have to go through all of the pillars of a successful trader, hence the journey to the mastermind. Your journey to becoming a mastermind is going to be having the pillars consistent of all the core concepts, everything you'll be learning in the boot camp, all the intraday mastery, understanding how to master all concepts on an intraday basis, your trade management and risk management pillar, everything about growing any sized account consistently, so on and so forth. Mastermind psychology course, which is what we're still working on to have a professional actually teach this course for you guys, so you know exactly how to manage all emotions throughout this process. Because having $100 account psychologically versus having a $100 to $500 or $1 million plus account is a lot different, because for obvious reasons you're managing a lot more money. Even though strategy might be the same, your approach is going to have to be a little bit different. And then, of course, the last and final pillar of the mastermind course is the algo mastery, putting everything together entirely to where you can understand boom, 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 how exactly to process that. But even though this is called, the mastermind boot camp, you're going to be learning algo concepts. We know that there's education all over the place. Some people are very proficient at SMC. Some people don't even know, the core concepts of SMC. So this is a whole conglomerate that's going to prepare you for the real course, your real journey. Of course, the Discord, for those new and current students, the whole Discord has been innovated and is going to be continuing to be innovated until day 4 of the boot camp. For the new students, you guys are going to be working together, and think about it like it's your class for school, elementary, high school, whatever it might be. You're going to be working up the levels with your class. So the boot camp, there's going to be specific criteria that I'll cover with the new students before the boot camp ends, things that you need to do, what you can expect. But as soon as the boot camp is done, all the current students, you guys are going to remain in that pro chat that you saw, and you're going to work through. There's going to be specifics, objectives, to then go into the next tier, right? Same with the boot camp students. Boot camp students, after you go through the boot camp, you don't gain access to the main general Discord. You then need to go through all of the core concepts. Once you go through all the core concepts, test out, then you're admitted to the main course. So there's a hierarchy system that we'll be going over immediately after the boot camp is completed, or on day 4 rather. And then, of course, you have our members area. So all previous students, you guys do and will have access to the members area, but you guys will not be having everything available. That's where the tier system approach comes in, with the specific hierarchy of levels afterwards, right? So the ongoing education, right, for the new students who participated, the Dreamer package, you guys get access to the Sunday webinars, trade breakdowns, live trading sessions, study rooms, so on and so forth. The basic bootcamp package, you guys will have access to this, and I will mention and talk about it later on. We got a bit long day. I just want to introduce this interface as a whole right now. All right. So the breakdown over the 4 days. Each day of the bootcamp is dedicated to a crucial pillar of our strategic approach to market mastery. Each pillar containing several blocks to pave the way for your newfound understanding. So let's see the first day. So today we are going to be going through liquidity mastery. On day 1, you guys can expect to learn the advanced understanding of liquidity 201, the operations of all financial markets. Sure, you've heard of liquidity, equal highs, equal lows, but it goes so much deeper than that. And that's what you're going to be learning in the first block today. There's not just retail liquidity, there's retail liquidity, SMC liquidity, institutional liquidity. Everything in the market moves based on liquidity. So that is the whole emphasis for today. Block 1. Block 2, then, talking all about the inducements, the different types of inducements, the purposes, how we use them, we apply them. And that's one crucial factor and pillar of the algo that we're going to be talking about today. And then, of course, at the end, putting it all together, what we've learned so far, putting that together, that plan to start identifying these setups, on a routine basis. So that's the initial glance for today. Now, tomorrow, we're going to be going over the algo origins. So now that we know inducements, now that we understand very high, very sophisticated liquidity, then we're going to go right into the algo. So the inner workings, controlling all financial markets, understanding when, where, and why all moves occur. That'll enable you to follow the footprint of the algo. So block 1, every block 1 of each day is going to be a recap of the previous day, inclusive of some new material, right? So block 1 is going to have the previous review from today. It's going to then have inducement cycle and the algo SMC traps. Now, some of you guys have heard about SMTs, smart money traps, before, but I can tell you confidently that anything that you do know about SMTs is either completely wrong or it's just one little small piece. This is where on day 2, we go over the whole algorithmic approach to SMTs because there's specific purposes for them that we use. Block 2, that is all about the algo. So understand being exposed to the central bank algorithm as a whole, understanding how the banks really trade. What's the main difference between us, banks, SMC? Because there are several differences, right? Of course, the liquidity cycle, the checks and balances of the algo, how to ping pong the markets, showing you why ping pong works until it doesn't and why you specifically should avoid it. I'm going to say that again, why you should avoid ping ponging. Block 3, thinking like the algo, intentions and purpose, and putting everything together for the extensive case studies. You're going to be receiving the step-by-step approach of how I analyze the markets on a very surface level with the algo, because these 2 days alone, you're going to see not only are they going to be long, they're going to be it's a boot camp. They're going to be very intense, and you're not going to be able to master everything. Do not worry. That is the point of the course, right? So that's day 2. That's this weekend. All right. Then day 3, day 4. Day 3 is going to be all about intraday mastery. Okay. So all Asia session mastery, case studies, algo cycle timings, which we haven't talked about with our current students. Block 2 is going to be all of the daily cycle variations, the 8+ variations, the weekly cycle variations, and then cycle mastery, putting it all together so you can understand it on a fractal level from the 1 minute all the way to the 1 week using these cyclical cycles. It's redundant that is. Then, of course, block 3, finally, the mastermind entries, getting into our variations of our entries, the best ones to use, how we scale in. Scale-ins are my favorite thing to do. I'm very good at scaling in because I've seen it tens of thousands of times, but you guys are going to learn how to do that as well. And of course, the perfect plan for intraday. That's what we're always going to end off every day with, is putting all the concepts together into a manageable piece by piece, function so you can reciprocate this every single day. All right. And then the last day, of course, to be life-changing for everyone, learning to escape into a manageable piece by piece, function so you can reciprocate this every single day. All right. And then the last day, of course, is going to be life-changing for everyone, learning to escape the matrix and take advantage of the limitless financial opportunities presented on a daily basis. Block 1 is going to be reviewing all things from next Saturday. Block 2 is going to be the intraday and algo mastery, putting it together. And then the block 3 is going to be trade and risk management. And then, of course, the Q&A for your next steps to success. All right, so your actual journey to success. What does this look like to become a mastermind? The first phase, the first step for everyone is obviously joining the boot camp. You guys have already joined the boot camp, so you've already taken your first step on your journey to success, which I'm so happy and I'm so proud of everyone for. right? After you go through that, there are still several more steps to go through. Your second phase, your second step is over the boot camp, the 4 days. This is going to be the initial shock that you're going to be undergoing with the brand new mindset approaching trading. Again, you will not master this in 4 days. I don't care who you are, how smart you are, you will not. This takes time, the experience, right? So now after you go through these 4 days, that's where your third step comes into play. Practice, practice, practice. So after the boot camp, you're going to have all these hierarchy. You're not just going to start a mastermind. You got to go through the ranks. There's pro, elite, dreamer, then becoming a mastermind, all these different roles that you're going to have and objectives in order to get there, from community engagements to then your performance of, actual money. And then also is going to be your comprehension of the skills in the form of exams and quizzes from the courses and all the other material. It's the ongoing support. So will it be easy? Hell no, because nothing worth having comes easy, right? So we got to excel to the next level. And as long as you have what it takes up here, you will have what it makes in your wallet. You're going to achieve everything you want, right? And of course, the last phase is going to be, that freedom phase. So showing you that approach, whether you have a few $100s to your name or maybe a few thousand plus, what's going to be your roadmap? Are you going to immediately go for funding? Are you going to immediately start growing your small account to then get funded? There's going to be a unique roadmap based on where you are financially. So there's not going to be any more confusion in your market interpretations. You're going to have a plan. You're going to learn how to execute that plan financially and do so on a routine, consistent basis. Everyone at this point will be different. Some people could make it right out of the gate. Some people could take a few months. It's all case sensitive based on how hard you're working, for that and the questions you ask along the way. So this is your whole journey to success. It's not something that will happen overnight, but it will happen in due time if you stay true to the course. All right, so now what I want to do is I'm going to have breakout groups just for a few minutes or so, everyone. Let me see here. All right, let me see. Here we go. We're going to have six. All right, so you guys are going to go into your breakout rooms. We're not going to do it as the community as a whole, but I'm going to set a 6-minute timer or so, and we are going to have you guys introduce yourself to one another, from new students to current students. All of you guys are going to be intertwined with a group of four to six people. All of you guys just introduce yourself, answer these questions, come right back, and we're going to get right into the course. Okay, so that being said, we're going to go ahead and create it, and you guys will have access right now. You guys want to go ahead and click that sign. All right. Mr. Yilmaz, if you could please join. Manad, TJ, if you guys could both go as well.
Hey, Nat, you want to join room number 1? Okay.
What's the move now? After I'm gonna talk for a while. All right, I'm gonna take 5 minutes, 3 minutes remaining, and we're gonna get started. Broadcast message to all. 3 minutes remaining. All right, guys, we'll be right back.
Nat, join room number 1. And Wilmer, you got to join room number 6. Room Lima, join room number 6. Hit join. And then now join room number 1. People, join room number 3, please. People, you hear me?
So how do I join room number 3?
Just hit join. Scroll down until you see room 3, hit join.
There's an option at the bottom that says breakout rooms. Press on it. Room 3, press join.
Yeah, I see.
Okay. And now you see it? See the option to join?
There's an option at the bottom that says breakout rooms. Did you see it?
You see where it says mute?
At the bottom of your screen.
Look at the very bottom of the toolbar. You see security, participants, check. You see where you check? And then record breakout rooms. Hit breakout rooms and then join number 1, room number 1. All right. Hutan, join room number 4, please. Look at the very bottom of your computer. You see the toolbar when there says breakout rooms? Join room 4. Cool.
They should all be back probably here in another, I don't know how long they need. I just had another minute remaining.
Yeah. Not a minute because it's getting late.
Yep, I know that already, man. I was talking with on a few people, Javon and Earl, and there's been the whole wrong approach. I mean, like, people are all over the place when it comes to this. So it's like, I'll talk to you about it later, but like condensing everything like from the last boot camp, I had 100 slides just for day 1. Like it's a lot. Like it's like I have to go through absolutely everything.
Yeah.
And, you know, there's just a lot of material. So, you know, for me to try to condense it, there's just so much crap. It's not even an algo boot camp because I got to teach everything before that point, you know. So it's like after this boot camp, things are going to be changing. There most likely won't be another boot camp approach. It's going to be something else, and I'll discuss that with you later. But
all right, no problem.
All right, I'm going to go ahead and say please join back broadcast. All right. If I close all rooms,
Shouldn't we just close all the rooms and make it easier?
Yeah.
so we return to the main screen. All right, got it. All right, everyone, go ahead and head back. We're gonna get started. All right, at this point, everyone should be back. Remember, please be in view of the camera, and our admins will be reaching out to you guys if there's any suspicions, if you guys have any questions, please message them, let them know. They're the ones who are going to be actively watching. All right, so hopefully you guys are able to introduce one another. We're going to have that another 1 or 2 times throughout today, tomorrow, and let's go ahead and get right into it. So, all right, everyone, bootcamp challenge. So those who know, we have a different challenge each bootcamp, and this is going to be the opportunity that you guys are going to receive to jumpstart your Dreams Effects trading journey. Now, what is the bootcamp challenge? It's an opportunity for you to share your experience, you know, on Instagram, any social media, to enter for a giveaway for a prize. And how do you participate? For any post that you complete, whether it's a story, Instagram post, the more entries, the better. And they're all presented with different values. So one entry a day is if you repost at least one of our content items on our story, if it's our boot camp and you reshare it on your story, that's 1 entry per ticket. Your second entry, if you want to get 2 entries per ticket, if you upload a picture or video of yourself or just of the screenshot of your computer, obviously with non-sensitive material, then you're able to enter 2 entries. So if you just take a picture, even it's of this screen or something else, and you let the admins know, hey, you know, just this is for the challenge. Okay, it is what it is. Let them know. You can take a picture and then just tag @DreamsFX for that story post so we can actually see it. If your account is private, we won't be able to see it and you don't have to enter the giveaway. But reminder, this is completely optional. It is not mandatory by any means. But the opportunity that presents after this 5th entry, right? Can we get 5 entries? If you post a short video of yourself or of your notes or just your experience, be 5 to 10 seconds, then you get 5 entries per post. Again, tagging us to make sure we actually see it. Your name then is added to the drawing list with your amount of credited points. So with that being said, the giveaway for this bootcamp is going to be a 50K MFF challenge account. The winner is going to be announced the Monday after the boot camp ends. So it ends Sunday. The next day, the boot camp winner will be announced and you'll be receiving your 50K MFF account. Again, completely optional, but why not partake in something that is completely free, right? Especially if you always wanted to fund an account or want an opportunity. This applies to all new students and current students. The selection is completely random. So the more times you post, the more entries you gain, and the quality or the amount of the entry is based on what type of post that you do on your story, on Instagram. Just remember to tag us, and your profile must be public for this. Even if you just turn it on for the weekends, turn it off, just make sure we'll have no idea, okay? All right, if anyone has any questions, you can ask me about it, type in the chat, whatnot. We're gonna keep going forward. Right before we get into it, rules and expectations of the bootcamp. Please, everyone, follow these to have the best experience. 1, the bootcamp is 4 days, and it's 4 to 5 hours each day. It's designed to be short and rigorous training course. However, we're going to be providing you guys time for breaks to ensure your attention and focus is on point. Again, we're going to be going through everything as efficiently, but as fast, as possible, because there is way too much to cover in 4 days. So if you don't understand something, there's going to be opportunity for it to be answered either during the boot camp or afterwards. Whoops, that was just 2. Recording and camera on the entire time. For security purposes, obviously, we say in the NDA, we teach our own proprietary and intellectual property that depicts our edge in the market. Any attempt to record the boot camp, take pictures, etc., will result in incident removal from the boot camp with no refund whatsoever. I encourage you guys, please do not take screenshots, pictures. Not only will there be a watermark, but we get notified. If you attempt to record from a third-party platform, we get notified that you do so, and that's just instant ban, no, nothing. We are here for you guys, and you need to understand the boot camp is not everything. It's just leading you to everything that is going to come afterwards, okay? So throughout the boot camp, we're going to have one random security check by our moderator for every person, just to ensure that you guys are going to show your workspace, you're not having any problems. And it's not just going to be, but 10 seconds. Hey, just share your screen. What's going on? Great. We're good. As mentioned, the reason why things are not leaked from us is because of the security protocols. It's no fun from a student perspective. Oh, we want stuff leaked. But I now understand as an educator, out of the hundreds, thousands of hours I've put into this, thousands of hours, it's kind of just like, you're not going to succeed if people just try and leak this thing. It's just going to end up being like everyone else. And especially you're going to see there's not going to be any advantage. There's not going to be anything, especially because you're going to have the opportunity to receive everything from the boot camp afterwards. And you're going to have all the videos of all the concepts afterwards and 10 times the amount of depth. So I encourage you guys, please don't be stupid. Please don't risk it. It's dumb. This is just the introduction. Okay. I'm not going to have any worries about that, right, everyone? Type yes if I'm not going to have any worries, right? There's not going to be anything. Type in the chat. Good. 3, write down all of your questions. The bootcamp is not styled to be an active Q&A section. We all know that you guys are going to have questions at some point throughout the bootcamp. That's why we leave cliffhangers. That's why we leave some things open-ended, because those questions will be addressed later in the boot camp. And if your answer is not received, then there's an opportunity on day 4 of the boot camp for you guys to ask all of your unanswered questions. So I encourage you guys to have a separate sheet of paper and label it accordingly. Boot camp questions, day 1, and then the section of the question that you have. Day 2, the section or the block you had the question. This is going to be a key piece of paper, so make sure you write down all of your questions in the most, in the best detail, and they will get addressed, they will get answered. All right. 4, take high quality notes. Don't just do Sanskrit or anything abbreviated. Previous students will tell you this too. Make sure to take high quality notes. There's going to be, adequate time that's going to be given, but at the same time, it's not going to be for you to copy everything on the page. The words I say are more important than what's on the screen. Just like in school, you can't put everything on a presentation. If you write down word for word, you're not understanding the most important things. So anything that's bolded, anything that's italicized, anything that I say are the most important. And for obvious reasons, not everything is going to be given on the screen, because in case there is someone who decides to break the rules, well, it's just going to hurt them. It's not going to hurt anybody else, because what I'm saying is still being delivered. right? So paraphrase the most important information and draw replica examples. If you have, pencils or crayons or markers, color coding, highlighters, whatever, to study them to the max. And of course, at the end, there will be an opportunity to receive all the diagrams for the bootcamp afterwards. So stay alert for that. Fifth and final thing, have fun and trust the process. All of you guys are a part of the bootcamp for the same reason. And just like college, you're going to be graduating off into the world of top tier trading. We are all here for the similar reasons. Developing meaningful relationships with other members and building a community of high skill set individuals is what separates us from everyone else. It's not just about making money. It's about the whole process it takes to actually get there. What it takes mentally, how to succeed in success and surround yourself around like-minded individuals. It's not like it's going to be a school project where you're working with people you don't want to work with and you're trying to have a half-assed project. There are very high skill set individuals within the community, and building relationships and starting to work in groups is going to be a key factor to everyone's success, especially when you're working on the same with someone else who's on the same wavelength. It's going to make you grow so much quicker. So that is going to be so important. So have fun, soak up the info, and then off to where the real mastery begins afterwards in the post bootcamp, Dreams Effects Discord, mastermind course, so on and so forth. With that being said, day one, introduction. We're going to do the key takeaways from the first, the bootcamp recording, only a few slides, and then contingent after that, I might say we could have a quick 5-minute break so we can keep going through it. All right, everyone. So the bootcamp recording recap. As you guys have all hopefully watched by now, and if you haven't, I heavily encourage you guys to rewatch it. Day one of May bootcamp is very informative, but is meant to serve as a complete review prior to actually joining the Mastermind Bootcamp. With the core concepts of day one alone, you can become more than profitable. Just trading structure, order blocks equal highs, equal lows, premium discount, you become very profitable. And that's a very smart edge to SMC, right? However, our goal is to exploit the algorithm that manipulates and regulates price. We're not interested in just trading another strategy with another edge. Our goal is to understand every single move that happens in the market, the reason for it, because you then know, well, shit, anything can be possible. But that's where a plan is going to come into play to showing you, once you know everything, this is how you only take the best of the best. That's the whole point of it, right? The bootcamp is solely about liquidity, derivatives, and mastering the algo, understanding how the banks really trade and the operations behind all financial markets. And you're going to hear that statement a lot. Operations of all financial markets, the back end operations, why everything works the way it does. And that's what the algo is going to be teaching you over the period of the 4 days. Now let's refer about some of the key takeaways from day one. While all day one concepts are important to be aware of, only a few of them actually remain important for the algo. For the rest, you're going to be learning how to use them from a different perspective. What are those things? What are topics that we do utilize from the day one? Of course, we use order blocks, we use imbalances, points of interest, fractality, and structure, but in a completely different utilized way. Structure is not king, as everyone is misled to believe. If structure was king, why do all traders who trade structure always on the wrong side of the market? Premium discount, while it's logical, it doesn't have any relevance in the whole scheme of things, especially when it comes to algo. Equal highs, equal lows, so on and so forth. That's what you're going to be further learning about, the why, but that's not what we trade. In order to know where and how to win, you first need to know how and where to lose. And that's what day one is all about. Everyone wants to focus on where to win. But what's the last thing that anyone wants to do in the markets? The last thing anyone wants to do is lose. And for the day one of the Mastermind Bootcamp in May, that's all we talk about is, oh, this is how you win, winning trading setups, win, win, win. But this go around, we're teaching you guys exactly where and how to lose Because if you know where and how to lose, that tells you exactly where to win. All right, so we're just going to go through that real quick. Now we're going to go to the day one, advanced liquidity 201. Now, of course, I know that there's going to be a process to this, so I want to have a raise of hands, raise your hand, type in the chat, keep going forward, or take a 5-minute break. Up to you guys. I'm ready to fly through, but I want to get a pull from everyone because I want to make sure your attention is exactly where it needs to be. All right. Day one, advanced liquidity. Lesson overview. In this lesson, you guys will be learning the fundamental application of liquidity. You're going to be learning the core concept of liquidity variations that provide fuel to the markets, all the major different retail liquidity types and the reason they fail, how to use retail liquidity against retail traders. What the heck? Whole thing just logged down on me. And again, in order to know where to win, you guys must first know where to lose. Where is everyone losing in the market? What strategy, no matter if you've done, indicator, basic retail, if you've done SMC, don't just study your wins, study where you lose with the data that you have for consistently. Are you losing based off of your order blocks? Are you losing based on structure? Are you losing anywhere? It doesn't matter at that point, right? There's always some commonality. So it's going to enable you to think by mastering these types. It's going to enable you to think from a logical perspective and give you the expert understanding of why all strategies lose at a certain place in time. When I say logical perspective, there's a difference between logical perspective of actual market operations compared to a retail logical perspective. For instance, we know that it would make sense conceptually if there's support. Well, retail's like, oh, it's already rejected a few times. It's going to continue higher. But there's difference between retail perspective and actual logic based on market operations. So that's just a key insight as to what we're going to be getting into now. So first things first, what is liquidity and why is it important? At the end of the day, liquidity is the volume of exchange between buyers and sellers. Now, there's a whole bunch of different applications for liquidity, and it doesn't matter if it's liquid assets, XYZ, but for the time being, we're just saying it's the volume of exchange between buyers and sellers in any marketplace. Liquidity is what provides fuel to the markets, and without it, it would not exist. It would not exist. What do I mean? Any strategy that you've used in the past, it doesn't matter anything. All strategies rely liquidity to be present, meaning if you're trading a trading strategy and you want to apply it in the markets, it requires there to be both buyers and sellers active in the market for you to apply a strategy. But not all strategies are based on liquidity, meaning all strategies aren't teaching you about liquidity, but why all strategies work at any given point in time is because the underlying factor of liquidity is always present in all of them, right? So what does it actually mean? It's essentially the more liquid an asset, an instrument, a pair, whatever is, it just means the more freely you can enter and exit the market as you choose. If you're trying to sell, your positions, but there's not any buyers who are willing to buy it back, you can't sell that position until there's a buyer that'll actually buy it back. So that's what liquidity is, being able to enter and exit freely when there's a whole bunch of liquidity of people trading on the back end, someone who can cover and take your order in the opposite direction. Liquidity is responsible for every single move in the market. Again, don't think about equal highs, equal lows. That has virtually no relevance at this point. Any move that happens, whether you go 1 pip higher, two I mean, 200 pips higher, lower, doesn't matter. Any individual move always requires liquidity to go there, right? Liquidity acts as a magnet for price. Liquidity is always building. It's always seeking. It's always collecting and then repeating. All of this is simultaneously happening on all different time frames all across the board. One move that happens in the moment is going to be a purposeful move that price is going to have to either build, seek, collect in the future. So liquidity is a big magnet that price is attracted to everywhere. And liquidity, going more in depth to it, why do we identify it and what does liquidity actually tell us? Liquidity tells us three important things. Liquidity tells us where price has already been. It tells us where it's going and how it will get there. It tells us where the money, or more professionally, is the gas is of any move in the market, right? So what is actual gas? What's gas in liquidity? If we know that liquidity is the volume of buyers and sellers, what is the actual gas of those buyers and sellers? What are the actual different positions these buyers and sellers are taking that are making a liquid market? Well, gas comes in the form of stop losses and all pending orders, whether it's a stop order, if it's a buy stop, if it's a sell stop, if it's a buy limit, or if it's a sell limit. If it's a stop loss, if it's a take profit, all of this is liquidity. Anything about someone's position is liquidity. But most specifically is where traders are losing. That is liquidity. Where is money in the eyes of the institutions or the algorithm? And that is based on where everyone is losing. So think to yourself, well, if this is the money or the gas, this is what and where people are going to be losing. So we need to focus on where everyone is going to be losing, so then we know where the money is, where we want to be collecting before price goes anywhere in the market. Give you guys about another 20 seconds or so. We're going to keep going. Again, just paraphrase, because we got a lot to go through. All right, let's keep going. So let's think about it. Imagine you're going on a road trip to a place you've never been before. Specifically for new students, if you don't know, go for it. Let's say this is where you are, and this is where you want to go. In order to get to your destination, what are three things that you need to get there if you're starting all the way to the left? Everyone in the chat, tell me what are a few things that you must have in order to get to your destination? Everyone go ahead and start commenting what you think. What do you need to get to your destination, to a place you've never been before? All right, right? So let's think about it. The first thing you need is you're going to need some form of transportation. That's a given, right? So your first form of transportation you're going to need in order to go anywhere, right? You always need a vehicle that's going to take you to your destination. And we're talking about something that's not close, right? So the next thing that you need is, after you have your vehicle, you need a way to get there, right? If you've never been there before, you need to figure out what's going to allow you to get there. And that's going to be a map, some form of navigation system, GPS. So now you have two out of the three. You have your directions on where price is going to go, or where the destination is, how you're going to get there when it comes to directions. What's going to allow you to get there is going to be your transportation. And arguably the most important factor that's going to allow you to get to your destination is going to be the gas. It's going to be your gas. So all along the way, if you have your car and you have your destination, if you do not have enough gas or fuel in your vehicle, you will not make it to your destination. But if you have more than you need, it's going to be utilized for a future trip, right? It's going to be utilized for a future trip. These are three things that you must have for any car trip, for anywhere, right? Well, that's where we need to think about the markets. The markets are an entire roadmap, always in search of a destination, but always need enough gas to get there. And price, how price is moving up and down, higher and lower, that is your vehicle. Your vehicle is priced that's going to allow you to get to your destination. But to get to your destination, you need fuel at gas stations to get there. And what are these gas stations? The gas stations are the institutional and retail traps or the liquidity pools where all of these types of traders are losing. I'm not talking about SMC and retail, they're one and the same. But institutional liquidity, understanding retail liquidity, by understanding where traders are losing, those are the gas stations that's going to allow you to understand where the destination is. So like we talked about, if you have enough gas, you're going to get there. If you don't have enough gas, you're going to have to fuel up before you get to your destination. So if not enough gas is collected, you can't get there. If more than enough gas is collected, it's going to be used for a future trip or for you to keep going maybe to a further destination. Very important is correct order blocks are what's going to be lying after your gas stations. So when your price or your car is fueling up, what's going to be the ignition after you fueled up for your trip, an order block is what's actually going to be like a Super Mario Kart accelerator. It's going to allow you to just boom, push directly in the opposite direction. And that's what order blocks do. Your order blocks are located after your gas stations. Those are what's going to set you right back on the right track for price. So by identifying where everyone is losing, we know where to win. That's going to be said many times, so keep thinking about it. Before I win, I got to learn how to lose. Last but not least, now we're going to be introducing the retail strategies that provide the gas that will drive us down the road to victory. So first block, retail liquidity, advanced liquidity 201. Equal highs and equal lows. We already know what these are, so we're going to fly by them, right? We already know what equal highs, equal lows are. So let's think about it. What do retail traders see? We know that retail traders obviously see support and resistance. Support and resistance, when you're looking at equal highs, equal lows, it's just a conglomerate area that has at least two touches, but if not three. These touches, it doesn't matter if it's candles, bodies, so on and so forth. But what is essential is it's building some form of ceiling. It's building some form of resistance where we know traders are going to be selling at. So if traders are looking to sell, we know where their stop losses are and vice versa. If we know that we see, oh, here's 1 touch, 2 touch, 3 touch, 4, we know that looks to appear to be some form of price floor. So this is where retail traders are going to expect to sell from, expect to buy from, right? So why do retail traders use this? Because it makes sense to sell and buy at areas that have previous rejection. This indicates some form of threshold that's going to allow the market to reverse. Now, if you don't have a stop loss, you might get lucky, but other times you're going to be completely screwed. That's why equal highs, equal lows are the most basic form of retail liquidity, but just a very small piece. What market conditions do they occur in? Support and resistance primarily occur in ranging conditions, as traders are typically trading zone from zone. I, for one, know that when I first started with price action, I was trading zone to zone, whatever made sense, because that made sense. So you're going to see support resistance all over the place. When you spend too much time on it, because you guys should already have that understanding. So now equal highs and equal lows, right? We know that these traders, they do not have their stop losses exactly at, these areas. They could be 5 to 10 pips afterwards. So the purpose of these types of liquidity is to build a pool by accumulating buyers at support and having those sellers distributed at resistance who got in prematurely. Again, everyone who's looking to sell here, and they see all these rejections, they're going to be entering after that. And the more times that you see a specific level rejected, you need to think about the purpose behind that. Is the more times that people are trying to sell and price is building a huge resistance, you need to think about, damn, there's a shit ton of money that's lying after where they're looking to sell, because the more touches that you have, the more rejection indicates the more amount of sellers who are trying to sell the market, which means the more amount of sellers, in terms of money, a much more amount of stop losses are lying above. So what happens is after there's a ton of sells, stacked, price liquidates them. And then based on the amount of liquidity that's building, you can expect a huge move in the opposite direction. But you can understand how large the move that will happen based on how much liquidity is building before the move. If it's just two highs like this and price were to wick it out and drop, it's not going to be as expansive because there's not a lot of stop losses lying above those two highs. There only might be a couple, relatively speaking. So now from a liquidity perspective, what do we look to do? We look to sell above resistance and buy below support. Knowing that retail is going to be looking to sell here, we need to be looking to sell above. And where, if we want to sell above, what's going to actually cause price to reverse? Two factors. And this is important. Students know I say this all the time. There's always two things that need to happen in order for price to go anywhere. Enough gas needs to be collected. And two, there needs to be a strong enough order block that'll cause price to get to its destination. So in this instance, we know where all the gas is. It's above here. Where's the stop or where's the order block? The order block is going to lie after our highs. So we're going to want to look above over here. So that's going to be our order block that we're going to use after liquidity is taken for then us to sell all the way lower. So it becomes very simple. Where's the gas? Where's everyone losing? Where they have their stop losses? Then identify the order block that lies above their stop losses, enter on that order block, and then price obviously will liquidate in the other direction. We get in where they get stopped out, right? You have retail who buys low, sells high. You have SMC who buys lower, sells higher. You then have institutions, algo, we buy lowest, we sell highest. And of course, the expected outcome in this scenario, sellers get taken out before price sells off. Sellers get taken out before price sells off, and buyers, they buy before price goes in the opposite direction. Always going to be the same, right? So the initial application of this concept. Determine the trend. So everyone, what I want you guys to take 10 seconds and tell me based off your knowledge, not about structure BOS, what does the trend appear to be like? Are we in an uptrend, downtrend? Everyone just either draw on the chart or type in the chat, up or down. All right, so we're in a downtrend, very clear, right? So we're in a downtrend, all right? So after we're in a downtrend, great, we know that we're looking to sell. Next thing we need to do, if we're looking to sell, we need to ask ourselves, where's the liquidity? If we're in a downtrend, what type, do we look for equal highs or do we look for equal lows if we're looking to sell? Right, so if we're looking to sell, we look for equal highs. Where are all the equal highs? Everyone, again, engaging, everyone participate, analyze. And we're forecasting the move. Remember, this move has not yet happened. You're going to be forecasting it. So everyone annotate on the screen. We can clearly see here, we have our equal highs right here, very evident. We have one touch, two touch, three touch. All of this is acting as a resistance, right? Next thing that we do is we then anticipate an order block, right? We anticipate an order block. So we know that if we have all these equal highs right here, we see all over here, we have one touch, two touch, all of these relative pool. This is going to be used as some form of support here. We have our resistance here. Now we need to ask ourselves, we want to sell lower. Where is the gas? It's above our equal highs. So now where is the order block? Everyone go ahead and identify the order block. All right. All right, so then let's see what happens, right? Got our equal highs right here. This is our order block right here. For those who said over here, remember about order blocks. This one, yes, this was an order block, but what happened? It was already mitigated. Once an order block becomes mitigated, it's not relevant. It doesn't become relevant anymore, right? And this out of service level, it doesn't become relevant. We only want an order block to be mitigated once. For those current students who know, there's a reason why it can be mitigated twice, but we don't have any information on that right now. right? So this is the only order block. And why is it this? Because over here we had an imbalance, but the imbalance was filled. It was mitigated. Perfect. So that's now taken care of. We know that this order block is not valid. We got to look above here. So where's the next order block with imbalance? We have a little gap right here. We have our imbalance. We then have our order block. So this becomes our valid order block. Now everyone go ahead and anticipate logically what the new move is going to be. Boom, right? And so that combining everything that we just talked about, exactly. In order for us to get to our destination, which is down here, we need gas to get there. Where is going to be the gas if we're in a downtrend? Our gas is going to be above highs. So this is the gas that we need to collect at the gas station. This is then going to be the order block that's going to cause price to go lower. And then this is going to be the new destination that we're targeting, because we want to be targeting new liquidity. We're going to be targeting new lows. So take out a high to then take out a low. And that's how we are going to be looking to sell. And exactly as such, right? Let's go through another one. Why is this not? Hold on, y'all. That's with some issues we had this morning. Things were not copying correctly. All right. So the first things first is if I were to do this, well, I'll just walk you through this. In this case, right? I don't know why all this was inverted, but we can see here, based on this, the first thing I want to do is determine the trend. In this scenario, all of this to the right over here was hidden. This is all hidden to the right. Now, when we can see that all of this is hidden, the first thing determining the trend, it will, based off this, we can tell we're kind of going bullish, right? So after we identify that bullish trend, we then want to ask ourselves, right, exactly, if this is where we want to make new highs, right? If that's going to be our destination, where's the gas? The gas is going to be below our equal lows. Again, we have one low, we have two low, three low, four. Someone's looking at this as a support. So then we look to buy below this low. And where's the order block? The first order block with imbalance right below. We can clearly see right here, right? This imbalance was filled. This is our only imbalance right here, right here. This is our order block. So if this is our destination, this is going to be the gas that's needed to get to our destination. So gas is going to be collected, and then we know price is going to go higher. Why? Because our destination lies at equal highs, very clear resistance that everyone's going to be looking to sell it over here. So now we're starting to develop not just the understanding of liquidity, but how price is actually going to move to get there. Always logical. Of course, then it'll just end up going all the way there. So in this example, we're going to do one more, go on to the next one. Everyone go ahead and identify in this case, determine the trend. What is the trend? All right. Everyone's saying buys, right? Awesome. Yes. So we are bullish. Great. We're bullish. After we identify the trend, next thing, what's the next thing we identify? If we are in a bullish trend, where do we look to buy below? Beautiful. Let's do one at a time, right? Great. Now we know where we're going to be buying below. Awesome. Right? Now we have where we're buying below. And the last thing we need to identify is what? If we know we're going to go higher, we have our liquidity. Where's our order block? Boom, right? This is our order block. Where's the first imbalance below? Our first imbalance below is where? Well, this imbalance has already been taken care of, right? Where's the next gap? Boom, next gap's right here. This is our order block. And remember from the video, it takes out, order blocks must take out liquidity. This order block takes out a previous wick, indicating money has been efficiently swept, and this is where the orders are still placed. This is our valid order block, right? So this is our order block. Now, how do we anticipate price getting to the gas station and to then go to our destination? What are we going to anticipate? Beautiful, right? Starting to really build purpose for moves, not just it's going to go here. How's it going to move to get there? So exactly that, right? All equal highs over here. Here's our equal lows. We're gonna have to take out gas from above a high to then get to a low and then a target, right? New highs. Boom, very quick. This is just how the principle of liquidity works at initial application. Even equal highs, equal lows. We already know this, but we're transitioning to not structure-based trading, but liquidity-based trading, right? So this is very simple. Identify the trend line. Are we going higher or lower? Higher, buy below equal lows, order block below to then target new equal highs, right? Awesome. Awesome. All right. The next type of liquidity is key zone liquidity. Like I said before, we have traders like myself way back when who traded from zone to zone. So this is called key zone liquidity. In this instance, what do retail traders see when they are identifying key zone liquidity? Key zone traders are viewing a zone that has been used several times for both buys and sells in the past, and it acts as a zone of contestation. So when you see over here, this was used as rejection. Over here, price broke it, used it as a support. Price broke it again, used it as a rejection, right? Rejection. Then in the future, right? What did price do? Came back and kind of used it as a support. Then used as a resistance, another support, so on and so forth. It's a zone that is indicated by buys and sells that are both lining up in an area, right? So of course we have all of these equal lows down here. We know that this is an area of key zone. Also here, we see that we have a zone of equal highs or still more key zone, all used as 1 touch, 2 touch, 3 touch, 4. So what's the point behind this, right? Whenever a zone is broken, retail is going to be looking to sell on the retest of the zone. Whenever a zone is broken to the high, they're going to be looking to buy on the retest of that zone. So why do retail traders use this? With retail logic, it makes sense to take positions at areas that have continually be rejected off of. And once broken, looking for the retest of that area. Once broken, look for the retest to then continue the trade in the opposite direction. Market conditions, specifically key zone liquidity, this occurs in ranging market conditions where there's a lot of ranging going on for buys and sells. That's going to build that layer of key zone levels. We got another 15 seconds and we're going to continue forward. I'll give you guys another 2 seconds. Keep going. Again, if you don't write something down, have questions, refer to on your piece of paper. All right, key zone liquidity. Again, furthermore, there are traders buying and selling within a range with no clear bias, and they fall into these traps of areas that act as a turncoat support and resistance that have several rejections and retests. This is the same image we saw to the left, right? And then what do we see? If you see a price that has been rejected as resistance and then a support, if you look for an order block over here, it will not work. So the purpose is we are looking specifically for retail traders to get in positions within the range, unsure of their bias, right? So it's causing them to be in both buys and sells because they don't know which direction the market's going. How do we view this is going to be based on the liquidity perspective. We identify bullish or buy order blocks below these zones and sell order blocks above. So if you see an area that was previously used as a break and retest, or a key zone that was broken a zone and then it retests the zone, do not look to buy there because every other type of key level trader is going to be looking to buy there. If it's used as a resistance, right, in the past and it breaks it, don't use it. Don't look for an order block that lines up with your key zone. Do not. Don't get caught up in the choppiness. If you're looking to buy below, right, a key zone level. If you're looking to sell, right, if you see a previous level broken, sell above your key level zone. If you're seeing a key zone, do not sell in the zone retest of it, sell above the retest, or better yet, just outside of the zone as a whole. The expected outcome in these scenarios, price will continue to accumulate retail positions within the range in order to gather enough liquidity to create an impulsive move to break the range. All these traders, again, over here, who are looking for sells, where are their stop losses, right? These sells are in place specifically to cause a whole bunch of liquidity or retail sells stop losses to be above these highs. So that's why they're building this whole range. One end of the range or the other is going to get broken, and the range internally will stay intact, and the lower end or the right end of that range will remain intact to then break the wrong end where all the liquidity is building. So even there, you might say, well, there's all these, there's all this support. Yes, there is all that support, but there's a specific reason it worked, and you're going to learn here in just the next block. All right. So key zone is the next one. So now what I want everyone to do is go ahead and identify the areas with a box tool, a line where there's clear sells that are being used, clear buys, and then all in between buys and sells that are being rejected in the same place. So go ahead and identify like the key levels that make a lot of sense. Give you guys 15 seconds, 20 seconds or so. And there's no specific rules for this. It's just what seems to be the most liquid areas for these types of traders. And I know it's always going to end up being like a drawing book, but I just want to see. Exactly, right? So give or take, you guys all have these zones drawn out right here. You guys want to stop annotating for a minute? You guys have all of these zones drawn, right? That was pretty synonymous. Now, again, we see over here, rejection, rejection, rejection. Over here uses as support, resistance, so on and so forth. To the buy side, clearly used as rejection, here used as support, right? So after we identify this, the next thing that we want to identify is specifically what? Identify the order block or blocks that are lying after the zone. So if I had to ask you guys this question, after you identify the key zone liquidity, where do you think we're trending at this moment in time, just based off of the limited information that you have? Are we going up or are we going down? Right? So what's just the most obvious? That's the thing I have to ask. And I know this is not TradingView, but this is what's needed before we go to TradingView. So in this instance, we're actually trending up, starting from left to right. You draw a trend line. We're bullish in this scenario. All these new sells, they're just there. That's not the pre-existing trend. So after we identify we're bullish, and remember what we said about the zones, we look for order blocks below the zones, identify the valid order block or blocks that would tell us that we're ready to buy higher now, because we're projecting a forecasted move. So where are the order blocks that lie below these zones? All right, we have boom, right? And that becomes pretty simple as is. You just then have to identify the order blocks that are lying just below. And we see here that exactly as you guys have analyzed, we have this order block immediately below, right? Below this level. And yes, of course, we also have this one here. So the next thing to do is anticipate what's going to happen. And based on what we've already done, we know that we have to collect some form of liquidity over here. We have all these traders here. We have these traders who are looking to buy here. No matter if there is an order block here, it will not work because it is aligned with a break and retest zone. It will not work, or key zone rather. So knowing it won't work, we can expect price to come lower, right below to take out these buy stop losses. And then we can potentially expect what? Collecting the gas to get to what destination? Exactly. All of these equal highs, all the way over here. So we can expect this, or we can expect something like this. Either or, right? Now you'll know exactly which one has the highest probability of happening later on, but this is how you would approach it. And exactly like this. Great. So the next type is our break and retest liquidity, infamous break and retest liquidity. This one is a little bit longer, right? So what does retail see for break and retest liquidity? Well, break and retest traders, right? If they're looking to buy, they wait for a high to be broken in an uptrend, and they look to buy on the retest of a previous high that was broken, expecting it's going to go higher. So what happens is this is their expectation right here. A is their expectation. But what's actually going to be happening in most scenarios is not that. We're not going to identify order blocks that align with break and retest. We're going to be identifying the order blocks that actually reside not here, but the order blocks that lie below break and retest. Because what ends up happening is when a previous high is broken, you're going to get initially an influx of buyers coming to the market thinking, oh, my break and retest is going to work. So price will retest it, may give you a little pullback. And then what's going to happen? Price will then end up failing from this retest, failing to make a new high. And then it will come to the order block below the retest as indicated in B. It'll give an initial small reaction, but then it'll end up failing. And that's the ideal scenario that we can expect, right? And then after B comes down to our order block, then we can expect a new high to be made. But as a takeaway, you do not want to look for an order block after a previous high has been broken. You don't want to look for an order block on the retest where a previous higher high was. So don't look there. You want to look below here. Now, counter for sells for the same thing. If we're looking over here, and we know breakout or break and retest traders, they look for, oh, here the low is broken. Here's going to be my order block right here. We know that that's not going to be the case, right? If you find an order block that aligns right here, that aligns with your low that was previously broken, it's not going to work. So then you look for price to come up to mitigate if there's an order block there, but just to really tap the resistance or the previous support as now it's acting as a resistance, expect a small pullback, price to then come to an order block above our previous, right? And then it'll end up breaking. So this is what we ideally want to expect. Just do not identify order blocks at these places. Retail traders use it because with retail logic, it makes sense to buy at the retest areas of structure. Again, you can understand how it makes sense from a retail perspective. Oop, it was tested once. I'm going to trade on the retest of it. And it's just in a bullish market, bearish market, making that new structure. Now, what market conditions does it occur in? It occurs in trending market conditions as it requires a high to be broken and retested to go higher, or a previous low to be broken, retested to then go lower. That's what they're anticipating. So I'll give you guys another 10, 15 seconds and we'll carry on. All right. Moving on. So now we're going to be going into the actual liquidity perspective of it, right? We're going to be going into the liquidity side of it. Hold on, y'all. If someone turns off their camera, just know that you will be kicked from today. Again, if you have to leave, let admin know and leave and join back. So again, retail logic believes the structure is broken. Price will continue and they will enter on the retest. The purpose of this, right, specifically looking here, when this high is broken, traders are going to expect to buy on the retest of this high, right? And then obviously it'll fail. It'll come to an order block below, and then it'll go higher. The purpose of this is to trap traders into getting into positions early and drastically stop them out before continuing, if they happen to at all. In that last slide, we talked about with break and retest, right? Typically, this will happen, right? It'll fail on the retest to then go higher. But equally probable is price can just give a little reaction and then just completely fail, right? Because they're looking to buy on this retest. The other and last option is it can just completely fail and then go lower, right? Because it's trapping them in the wrong direction. So the purpose of it is, again, to drastically stop out traders before continuing, if at all. From a liquidity perspective, we identify the order blocks below the retest of a previous high. So below the retest of here, we identify an order block. And for sells, we identify order blocks above the retest of a previous lower low. So if you have a high, a low, a lower high, and then you have a new lower low, you don't want to sell on the retest of this right here. You see what happened. Price came to, mitigate this or tap that retest, gave a small reaction, but then came up to the order block right above, right, our retest, and then ended up going lower. So the expected outcome from it as a whole, remember, is that these three things will happen, and I would absolutely write these three things. Price can either retest the previous structure, give a small reaction, and then it can fail. Absolutely. This is the first thing. The second thing is price can respect the previous structure. It could actually do this. It could respect it short term, but then end up taking them out before going higher. So we don't look to buy and break and retest, but know that what can happen is it can work in a very, very small percentage of instances to go higher short term. But in order for price to go higher the long term, the retest will still end up getting taken out. I would definitely draw this. And then the third option, this is the second one. The third option here is price can just break a new high and it could just completely fail after the retest. Those are the only three things that will ever happen with a break and retest. Three options, three scenarios. And everyone, once you're done typing that or writing that out, go ahead and type one in the chat. So I know when to move on. All right, 8 people out of 40. Let's see. Everyone, once you get 20, we're gonna continue. All right, on to the next. All right, now you guys are let's apply it together. First things first, I want to ask everybody, where are we trending? up or down. Just draw the trend on the screen. The faster we can go through this together, the faster we're gonna get it, right? Boom. Always ask yourself, where are we trending? We're trending down. Don't mark the structure, just ask yourself where we're trending. Great. We know that we're trending down. So after we identify where we're trending down, now we want to ask ourselves, where is the break and retest for it to look like sells? So like we want to see here, we're in a bearish trend. Where is the break and retest here? Again, we're forecasting a move that will happen. So I would only draw the main one that's going to anticipate the new move. Remember, after a low is broken, it can either work short term, then to fail. It can either give a small reaction, come higher, or it can just completely run away. So in this instance, you guys have all identified it. Here, we know that we're in a downtrend. Great. If we're in a downtrend, we then want to identify, based on where price currently is, where's the break and retest? Well, we know here, if this is high, low, lower high, lower low, we know over here, this is a retest area, right? This is a retest area. So if we know that over here, there's not going to be over here, there's not going to be, when price comes back up to here, this isn't going to be a valid area to sell. Where then is the order block line above that we do want to take a sell at? Boom, right? Awesome. Everyone identified it. Great. Always having that step-by-step process, making it simple, right? So now that you guys have all identified it, break and retest. Well, actually, someone drew it. I didn't want to say nothing. We do have this. However, you're always going to have two order blocks, if you guys remember, an extreme and a decisional, right? So in this instance, what do we see? Equal highs. Is this a valid order block? No. Is this a valid decisional? This is a valid decisional, but it's also lying at equal high liquidity. So this could work, right? This could work, but our extreme, because it's lying at liquidity, this becomes our new extreme. Again, this is a more advanced concept we're going to be going on throughout as we're learning. So this can work. It can work right here to go lower, but because we do have it lying at equal highs, most likely it can come up to the one just above, right? So if you didn't identify it, hopefully you understand now, but your order block selection is going to be specifically contingent on the types of liquidity that lie before it, but more importantly, the ones that lie after it. If your order block is lying at liquidity, even if there's liquidity before it, it will not work out. And write that down. If your order block is lying at after liquidity, which in this case it is, which makes it valid, but your order block is actually lying at liquidity afterwards, right? After it, it's not valid. So here then, we know what price is going to do. And as you guys saw, we did get a small reaction. Our order block, we got a small reaction, but it wasn't where the main move was. So because it was an order block, it'll give a pullback. But because we still had the order block was lying at liquidity, it didn't give us that full move. But after it took out that liquidity, right, all these relative equal highs over here, more importantly, combining another type of liquidity, think about it. Key zone, right? Key zone. It's difficult because you got to be mindful of all of these types of liquidity. That's why it's really not that valid. So type 1 if you understand it, and we're going to go to the next example. All right, guys, now it's your turn. Now it's your turn. I want you guys to all do this together. 1, everyone identify the break and retest. Where's the trend? We know the trend is evident at this moment. Where's the break and retest? Boom. We know the trend. We know the break and retest. Awesome. After we know what the break and retest is, which is right here, we know this is the break and retest. Where's our correct order block or blocks? Decisional and extreme. Boom, right? So let's see which one it's going to be. That's it, guys. There's your decisional, there's your extreme. Awesome. And there you go. There you have it, right? Oop, here's our break and retest. Don't identify any order blocks over here. Where's the one lying above? Here is our order block. And not getting into it now, but there's a reason this is valid, even though I knew one of you guys was going to identify it's lying at liquidity. The reason it's valid is because it's following order flow. Its order block was mitigated, price went lower, came to mitigate that previous order block, then it dropped. So this is our valid decisional in this instance, because we're already in a huge downtrend, right? So that's our valid order block. Right, so some key points to remember about break and retest. Some break and retest areas can work, as I've identified in A. Sometimes they can work, but only for the short term to grab enough liquidity to go higher or lower. So if you do see a break and retest work and you do have an order block here, and it does end up working, just know the reason that could happen is for price to then build more money below, because now it's a key zone, right? Isn't this a key zone now? But break and retest does work. It's building key zone liquidity, which in that case, we look to buy below, right? So then price will take out the key zone liquidity. In that instance, we then look for an order block below it, and then with the expectation of it going higher. Break and retest will fail after a slight reaction from the retest to accumulate more positions to then continue. So what happens is we could have a reaction. We could fail after the small reaction and then come to our area to then go higher. It's the second option. The third is our option C, which is after you have price take out and make a new low and you see your break and retest here, well, price could also just go all the way higher. So three things to always be mindful and aware of. And you're proposed these different scenarios because you will know later on which one will happen. You're not going to know which one's going to happen now because that's a lot more. But all right, everyone should have these written down. Again, I'm going to give you guys 10 seconds and then we're going to keep going right through it. All right, so the next type of liquidity, everybody, is going to be our trend line liquidity, our notorious trend lines. Trend lines are very subjective. There's no right way to draw a trend line. Some people use bodies, others use wicks, so on and so forth. A trend line, obviously, we know retail traders see a trending market where they look to get in on the retest of trend lines for continuations. If you are in a bullish market, where are you going to be looking to buy your trend line? You'd be looking to buy on a wick rejection of your trend line to then go higher, right? You'd be looking here to buy. If you're looking to sell for a trend line, right? If you're in a bearish trend, you're obviously going to be looking to take your position off of the next trend line mitigation or the next trend line retest. On the opposite end, if you're looking to use a trend line, not for a trending market, but for a counter trend, retail traders do what? They wait for the break of the neckline of the trend line, wait for the break of it, and then what do? They look to buy on the retest to then go higher. That's what trend line traders do. They're either going to take their position on the trend line to continue to continue the market trend, or they're going to wait for the trend line to be broken, buy on the retest, then go higher. So that's what they're looking for, either continuing or they're getting in reversals. Retail traders use it because, again, like support, resistance, anything, The more touches that it has in a trending market, the more intent appearing so it has to continue doing that way. Again, they're either going to enter on the retest on the trend line or enter on the break of it. What market conditions does this occur in? It occurs in trending markets, higher highs and higher lows, lower highs and lower lows. Again, you're learning all of these, not because you're always going to be consciously aware of them. You should always be aware of them. But what you're going to be learning is where one thing tells you where everything loses. Right? Boom. So now, millions of traders identify trend lines as logical areas. It's the most utilized and manipulated retail tool. Everyone learns about it when they first start trading, right? How do you draw a perfect trend line? The perfect trend line, it doesn't exist, right? There's no right way to do it. So the purpose is to trap traders on the retest of the trend line and trap retail traders on the break of the trend line on the retest. So trend lines are heavily manipulated because when a trend line is broken like this, we know that those who are selling here have their stop loss above the trend line. They're losing. Those who see the trend line broken very drastically, they're looking to buy on the retest of the trend line to then go higher. So both of these types of traders are going to be losing. Even over here, what do you see? A trend line. The trend line is broken, but then price continues the opposite direction. So what is that from the liquidity perspective, right? So from the liquidity perspective, we know that identifying the order block lying after the trend line that caused it to be broken, this is the order block that we want to focus on. What we do to draw our trend lines, right? Because some people do not know this, but when you're connecting your trend line, you're not doing this. If you're in an uptrend, you're not connecting the higher highs. You are only connecting the higher lows in an uptrend for your trend line. If you're selling, right? If you're selling, you're not marking this. You're marking the lower highs that are making your lower lows. So what do? Right? We know that trend lines have to be broken, and there's specific reasons trend lines see this, or trend line traders see it doesn't work. What happens is when you see a trend line, we need to expect two different setups to happen for a trend line, two different setups. We need to expect one, that the trend line is going to be broken and then it's going to go higher. So we want to identify the order block that resides below the trend line, right? So we need to identify the order block below a trend line to go higher. And if we're looking for sells, we want to identify the order block right after the trend line to then go lower. So these two setups are trend line one. These are the trend line one setups. So draw both of those, and there's another type of trend line setup we look for. In 10 more seconds, draw those two trend lines. I'm going to draw the other setup. We get right to it. 5, 4, 3, 2, 1. Great. The other trend line setup is this. Instead of just coming slightly past the trend line, what can happen is price will come to 1, 2. It'll take out two previous highs to then come to the first instance that actually started that trend line. So remember, for trend lines, price will either come to take out that first or that last area on the trend line to then go lower, or, very important, or it will come back to the first high that started the trend line. Come back in here to that first high. So it's either this is going to happen or it's just going to come right here. So in this example, this would be your decisional, and this would be your extreme. So in both of these examples, you can see this first one, trend line was broken to come back to our first high. Second example, the trend line was broken to come back to where price first started the trend line, like in this instance, and just flip the drawing, inverse it, draw the sells, and you can come back and draw the buys. All right, type a 1 in your chat if you're ready to go, so we can keep flying through this. Again, you're not going to be able to write everything down. It's the point of the boot camp. You're going to have everything afterwards. All right, awesome. Love it. Boom, right? So the reason I keep pausing the screen is because, again, format was messed up slightly just to make sure. Cool. All right. So let's say that this is where we are right now. In this instance, let's identify the most recent trend. Where are we going? Are we going up or are we going down? Which one does it look like? What's the trend? Right, so we have some conflict here. We were previously going down, but now we're going up. So what we're going to do is we're just going to say, for the sake of argument and sake of time, we can see that now we're going up. We were going down, but let's, there's a key point here. Trend line, it was broken all the way over here, right? Order blocks have already been mitigated. So that tells us if we were going down, well, the only other area for us to sell from would be a little higher. So let's think about the buys, right? So for the buys, everyone draw the trend line for the buys exactly as it should appear. So with that being said, if that is the trend line, as you guys have now all identified, mushrooms. If that's the trend line right here, where is the order block? Where is the order block if this is the trend line? Remember the setups we talked about, right? Remember the setups. Remember, if there's no imbalance, there's no order block too. Here guys' drawings, right? So if we're thinking about it in terms of pushes, right? We have one low, pull back, two lows, pull back, 3, 4. This is where price currently is. Where's the first thing, the first place we should always look to buy based off trend line liquidity? We should always expect this first low to be broken, right? Again, if there's no imbalance, there's no trend line, so or there's no order block, so I wouldn't emphasize it. Here, we always need to expect the first low to be broken. Is there an order block to the left that remains unmitigated? Yes, there is one right here. So this would be our first order block, right? The next one would be where? Well, this, we have 1, 2, 3. We want to identify the order block that actually started, right, this first push. Where's the imbalance? There's no imbalance. There's no imbalance. No imbalance. Boom. We do have a small imbalance here. So this pink box is then our next order block. So price will either do this or it'll come down here, then go higher. Only one or the other, one of the two things. Systematic approach. If it's this, do not look here. If it's here, look there, right? So either taking out the first touch or the last touch. Of course, you can see here, mitigated, price then runs away, right? And that's all that you would anticipate. Very straightforward. Let me anticipate this, just trying to get all this ready. All right, so now what I want you guys to do is the exact same on this, and then we're going to keep flying through. Identify the trend in this scenario. After identify the trend, draw the trend line as it appears for touches. Boom, 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 right? We have several different trend lines in this case. So our trend line, right? Let's say that, thank you. I'm going to go, let's keep an ads run, let's stop it, right? But this is our trend line right here, right? Price already broke the trend line, but there's still an anticipated move that we're looking for. So based off of those trend line setups we talked about, where are we going to be looking to sell? Where's our order block? Because if you see, there's a lot of different ones. You're going to have to use the process of elimination and in conjunction with the specific setups we look for. So let's see, we have a high, we have a low, first touch. We have our high, low, second touch here. So we know that this is where price must come back to at the minimum. At the maximum, right, it's either going to take out the first touch or it's going to come all the way up here. So someone who had illustrated 1 and 2 is absolutely correct. Nothing in here is valid, right? Nothing in there is going to be valid. So we need to look for the order blocks. Nothing above here. This is all equal high, break and retest liquidity, correct? Correct. So now where are the order blocks? Where's the first order block that's above here, right? Well, we have a couple different ones. Do we choose this one? Do we choose this one? Do we choose this one? In this case, they tying in more types of liquidity, right? We can be able to think about it. But we know we have some form of order block in here. We're going to have something over here. So let's see what price does. Here's our trend line. The first order block right here after the trend line is taken out. Always the first one, right? And price after the fact will do exactly as we anticipate. Come up, take out all of these equal highs right over here. Take out all of these equal highs that are now formed into the immediate order block above, and then taking out the gas, looking to sell, taking out gas above our equal highs, our trend line, finding multiple types of liquidity, and then collecting the gas to then go to our destination as we already have so many equal lows. Very straightforward, but again, when you identify all these order blocks, it can get confusing. You should only ever have 2 order blocks at the absolute maximum. If you're saying order block, order block, order block, order block, order block, that's not SMC, that's gambling. That's not a logical approach. Or that's, I mean, yeah, that is SMC when you're doing so many order blocks, right? But this is how you need to start approaching it. Great. So now the last type of, or one of the last types of retail liquidity for today is going to be breakout traders, buy stops and sell stops. Why do traders use the breakouts? Breakouts, what is this, right? So those traders who are anticipating a high or a low to be broken, these are where sell stops and buy stops come into play. So if you are in a downtrend, right, if you're in a previous downtrend, you're going to be placing a sell stop below a low, right? So your low is where sell stop is going to be placed, because those who don't have the patience or those who don't know how to enter, they believe that when a low is broken, price is just going to do what? It's just going to keep continuing to go lower, lower, and lower. So their stop order is just a pending order that gets activated once price breaks a low, a sell stop. After this is stopped, it's the sell is then activated. So they're expecting this to happen. But in reality, they're getting in by the time it's way too late. Right? Same thing for buys. If you're in a bullish market, where do buy stops occur? Those who expect new higher highs to be made, they don't want to wait. They're just going to place their buy stops right here. And they're going to expect price to continue. we know now why it makes sense for this to be a retail strategy. So they just want to catch positions after, a high is broken, after a low is broken, so they can be in the trend, right? This occurs in all types of markets, but specifically those who are in trending markets. Again, they're looking at a base level just for new lower lows, new higher highs. That's all that they're looking for, right? So go ahead, draw out these two quick examples, and then type a 1 when you're done with that. Great. All right. Awesome. So keep moving forward. Again, this is basic day one. This is not everything. just not to get your guys' hopes let down. This is just the baby steps, right? So let's keep going forward. So breakout traders, millions of retail traders want to catch the move after it happened, and they're induced into seeing something on the wrong side of the market, right? So as we just talked about, you have buy stops and sell stops above and below every structural point. The purpose is to collect these buy stops and sell stops, and then reverse price to completely stop them out. So what happens is as soon as their buy stops, oh, here's my high that's broken and an uptrend, here's my order. They're going to get in, they're going to give you like, oh my God, yes, it's tagged in on you making money. And then what's going to happen? Price will then reverse against them completely and entirely. Those who are looking for sells when a low is broken, oh yes, my order's tapped, great, maybe put on some more, and then their move is just going to completely get stopped out. And their stops, again, their stop losses, but this is where they're getting activated, hoping it's going to go higher. Their stop loss is going to be back within the range, because if once the range is broken, they just want price to continue. Once it comes back in the range, once it comes back, they want this to happen. Once it comes back in, right, their stop loss is just going to be right before their entry. So again, sells, as soon as a low is broken, their entry is activated. Their stop loss is just going to be a little bit inside of, right, the low, and then they're just going to get completely stopped out. So what do we focus on with this? We focus on thinking like a breakout trader and doing the opposite. Key note right here. If you think like a breakout trader and do the opposite, your whole perspective as a whole will start to slowly switch. Pretty drastic at that point, right? It'll start to drastically switch. So do the opposite of what breakout traders do. The expected outcome, price will trigger, then SL stop orders, it'll get triggered, it'll then stop out the orders and then completely reverse in the opposite direction. That's the ideal scenario, right? That's the ideal, is it'll take out a new low. Or what can happen is the second option is stop orders can get triggered, they'll get then stopped out, and then price will continue. That's the other scenario. So go ahead and draw both scenarios over here. 1, and we have 2. Give you guys another 10, 15 seconds and we will carry on. Almost out of break. We're going to couple more slides. 15-minute break. Awesome. All right, we're going to go ahead and continue.
So at this moment in time, identify where breakout liquidity is lying. Where are buy stops and where are sell stops? Go ahead and identify them. Based on where price currently is, remember everybody, based on where price currently is, that's what we're forecasting. And remember, structural buy and sell stops. They occur at structure points. Right? You're always selling above, lower highs, higher highs, right? Got it. Boom. Awesome. All you guys identify, great. Think about it. In this scenario, what are we looking for? Well, we identify the breakout liquidity. So the first place that we should be looking to sell, right, is we want to be selling above some form of breakout, right? So a breakout position here, we know here, once this high is broken, we have some traders who are looking for buys here, right? So we have a buy potentially above here. That same token like you guys have, we have below here, we have sells. Below here, high, low, we have sells. And above here, we have buy stops, right? So let's identify the order block for the black line, right? If that is the gas, what is the second thing that is needed for price to go anywhere? The second step, mind you, the order block, right? So let's see. Boom, we've identified our order blocks. Awesome, right? So now we've identified our order block. Now the last thing to do is figure out what the move is going to look like. So presumably, like you have taken out a buy stop into our order block that has imbalance, right? And then we're going to be targeting a new sell stop, right? A new sell stop, so on and so forth. So this is the exact move that we would anticipate. Price takes out the stop into our order block, and then price absolutely reverses into, right, another stop area. Key insight right here for a very near future conversation. Now, the last one that we are going to be doing in this instance, everyone, first things first, identify the trend. What is the trend at this point in time? Bigger picture, what is the trend, right? You don't want to get caught up in the small. What's the bigger picture trend? We see all this from the left that we're looking for general buys, right? Great. Looking for general buys. Cool. Picasso, like it. After we identify the buys, now we want to identify the breakout liquidity. Where is the breakout? Where's the buy stop? Where's the sell stop we need to be taking out? Where's the breakout trader we need to collect to go higher? Great. So we know here that in order for us to go higher, we need to look to buy below where sell stops are, right? So here, there's our sell stops. You guys already have any order blocks. Awesome. So we know at this moment in time, range, we have below, we have our high. We're going to be taking out a low into our order block that is unmitigated and then coming to a new high. And this is how it's all working. Again, think about trendline liquidity. Further supports our confirmation, right? Further supports our buys. This order block over here has, again, not been mitigated, and then we're going to be continuing higher. There's so many factors as to why this is a very high probability trade, besides just what we're looking at. Again, later time and date for that. And that's just how it's going to end up working out, right? So on and so forth. Awesome, everybody. So now what we have is we have a 15-minute break. So 15 minutes. Let's be back here at 12:32 p.m. EST. 15 minutes starts now, everybody. So you guys can leave your screen, go eat, go to the bathroom, do whatever. Turn off your, prefer to leave on your screen, but if you need to leave, that's fine. And we'll be back here in 15 minutes on the dot. All right, so we have removing people. If you're removing people, that's okay. We'll just go and get started. Send me a message when you're ready. So now that we just had our break, everyone, some of these things you guys might have already been aware of. Some things might be completely brand new, but I am here to say that this doesn't even scrape the surface of what is coming. We do not trade specifically this way. And I know that there's current members in here who definitely have forgotten or maybe not even used what we just went through because we focus on so many other things, not about this. This is not algo trading. Again, this is an algo boot camp, but algo trading starts tomorrow and then is on day 4. But we need to take the necessary steps to understand what algo trading actually is. And it's not equal highs, equal lows. It's not these different types of liquidity, but you need to understand the most important factors about what we just went through. Liquidity, the basic strategies that fail, but more importantly are the purposes, why they do. And you're going to learn how we can use that to our own advantage exponentially more than just identifying the order block just under it. It's a whole process, understanding every move everywhere and the purpose of everything, purpose and intent. So now is going to be the very exciting block that's going to change a lot of your guys' perspective, as we somewhat previously just had at, is going to be about the revelation of inducements. That is now what we're going to be getting right into, understanding the psychological purpose, the analytical reason why you've always been on the wrong side of the market, and how to turn your biggest fears into your greatest strengths. Because as much as inducement is analytically and psychologically cumbersome, it uses your emotions and your money against you, which you're going to very well realize. And there's specific reasons at specific places, specific trends. You're always getting caught up in it.
And if you use BOS or cute chalk, you're going to be learning not to do that, right? And if, when you know exactly why it fails, then you're going to know how to apply it properly. But the whole goal is for you not even look at structure, but you have to be able to master structure before you know anything else, because structure is very heavily manipulated, right? So now what we're going to get into is, of course, another breakout room. So again, we're going to take 5 minutes maximum this time, get you guys warmed up, because then this is the last stretch of today, right? So we're going to end off today with the inducements, several examples, and then a whole A to Z approach on how to use inducements for some of your highest quality and stellar setups. So with that being said, I'm going now to break out you guys for 5 minutes. You guys will end up meeting everybody. I know current students, you guys know one another, but you're going to be knowing one another even better. So we're going to do breakout rooms. We're going to do this one last time, and let's do this. All right. I'm actually going to do recreate one more, another complete randomness. And I hope I'll do one more time. All right. And go ahead, guys, just answer all these questions and be back in, let's say, 4-5 minutes at an absolute maximum. So let's get right to it. Everyone, please join. Do not stay in this main chat. I'll call you back when you guys are ready. Ziggy, set a timer for 4 minutes. We're all ready. I think we are all ready to continue. All right, let's see. All right, perfect. Admins, please. Beautiful. Awesome, Angela. Cat attack, that's funny. Awesome, guys. Well, I hope these breakout sessions are better. I figured it'd be much more efficient to meet one another quick, because we previously would have all members introduce themselves to the community, but I know that takes some time. So hopefully that's a little bit better of an experience. It'll allow us to go through a lot quicker. Awesome. Love that. All right, perfect, guys. Let's get right into it. To head to second and the last blocks for today. So block 2, the revelations of inducement. In this section, you guys can expect to learn structure is not king. You're going to understand where all types of trades are losing, even more so than what we previously just talked about. That specific point where all of these types of strategies are the same conglomerate area where everyone's losing, and what is actually one of the most manipulated forms, the most manipulated form of liquidity that all strategies are built around, right? You're going to be learning the routine approach of the cyclical manipulation and all of the financial markets. You're going to be receiving the answers to your analytical and psychological losses. And this is the first step in introducing the algo. This is one of the pillars that you will be learning now. Time for the truth, everybody. Time for the truth. How many of you guys and girls have always thought structure was the way? Or if you've been marking your structure and still losing trades and still getting them wrong, right? Well, it's time for you to learn why now. When you learn the why, you will start to understand seemingly everything over time. They need you to lose. They need you to lose. We, me, you, all of us, we do not control the market, but we are participants in a much larger plan. And it's like chess. Those who are actually controlling the chessboard are, the composite operator. It is going to be those who are the market makers per se. And all we're just little pawns to their scheme of the market. You have the kings, the queens. Those are the big institutions. Those are, the true smart money, not smart money concepts, but smart money entities. And we're just irrelevant pawns that can only move one way or the other, not in all directions. So we're simply a part of their plan, and they need us to lose for anything to happen in the market. We're always going to be a byproduct.
And for that, with that being said, they're not out specifically to get us. But what happens is, let's say you had trillions and trillions of dollars, multi-billions of dollars. Would you not find a way to put more money in your pocket without having to do anything to do so? Meaning, these conglomerate of entities over the past several decades, they've spent multi-billions in order to preserve trillions. They've brainwashed the mass and general public to learning strategies that don't work, or if they do, a very small percentage of the time, because then that hooks you in realizing, wow, this can actually work. And then you take so many losses before you're profitable, and that one or two wins that you make, that's just going to keep you on the edge to then following those same strategies that don't work. So they brainwash you into learning these strategies that don't work. It's not a common fallacy that the reason why some of the top Forex education, the same websites come up, not by SEO, search engine optimization, but it's because it's paid to be put first. Not anything about smart money, nothing about anything what you're going to be learning, because they're teaching you strategies that will put more money into their pocket. And that's what the smart people who created chess, those are the ones who are doing. And that's the big money, the institutions. They have the capital to spend that money to brainwash you into learning things that don't work. So they know that you're going to lose. They need you to lose, but you're just going to be a little irrelevant piece of their puzzle, because the money that you're going to be losing is not going to be worth, a nickel or dime to them. Furthermore, the reason why we're always a byproduct of all movement that happens in the market, the reason that we are always getting trapped in the way is because these banks, institutions, funds, they have access to order books and liquidity providers where they can see every entry, every limit, every stop loss, stop order, pending order, take profit. They see it all. But it's something very important to emphasize is that when its common strategy is used over and over and over and over, and you see millions and just tens, hundreds of millions of orders that are all in the same places routinely over time, statistically, where are these people going to have their stop losses? What motivates people to be taking trades? What's going to factor in fear of failure or fear of not, doing well? What don't they want to have happen? And they have very sophisticated algorithms that understand exactly the points where not just one type of trader, but all types of traders do not want to lose and will not be focusing for price to go. All traders focus on their own confirmation bias, and how the algorithm and how the banks understand what's going on is everyone at some point will be using a similar same strategy. And every factor, whether it's structure, whether it's trend lines, they all rely on the same factors of stop losses. Where are those stop losses? All in the same places. So these entities need to manipulate price to collect the stop losses to continue. It's the necessary evil of the marketplace. It's what keeps the market in homeostasis. The market's not just vertical. It needs to go higher, lower, but there's always needs to be fuel and a reason for that to happen. And they're capitalizing on your money because your fear of losing or your greed is what's feeding into that repetitive decision that you're making to over risk, to jump into trades early. They know exactly everything that you're thinking. Anything that you've thought, I've thought, there's only so many things that you can think about when it comes to price and your emotions. It's not like you can't, there's not like new emotions to be felt after you've been doing this for a while. It's always the same, right? So with that being said, understanding everyone's stop losses in the market and where they are specifically losing is how we have to think. We have to flip the script. We have to go the unorthodox way. Before we know where to win, we need to know where everyone is losing, at least with a rule-based system. Obviously, if you're entering at a support and you have your stop loss 100 pips, you might get lucky a few times. Like myself, didn't have a stop loss. I endured pretty great drawdown before my trades would end up working out. So you can get lucky. But studying where stop losses are tells you where all the individual gas stations are of how price is going to get there. And if you remember from earlier today, I emphasized
liquidity tells you three things. Liquidity tells you three things. One, where price has been. Two, where it is going. And three, how it's going to get there. And that's the roadmap, the analytical roadmap that we're trying to depict on any time frame, understanding the narrative. Because at the end of the day, we're detectives. You know, we're story writers. We have to figure out what is going on in the market by understanding the back end, by understanding everyone's emotions, everyone's strategies. That's how you build a very, sophisticated and cutting edge strategy, not by just choosing one thing and, oh, this works great. You can make money doing that. Granted, you're consistent and have a profitable win rate. Doesn't matter what you use at the end of the day. But that's not my goal. And I want to, educate you guys on how to understand not just a setup, but every move everywhere. Doesn't mean to take it, but that's what you're going to be learning throughout the duration of this boot camp is, again, the complexities of what you're about to learn now. And again, this has been on my own dime. Two and a half years ago. Why did I lose? Why did I make all those decisions that I made in order to lose everything that I had? Emotions, 100%. But even more importantly is I did not want to lose. I was just focusing on the wins. So if I had studied my losses more, I would have inevitably won more. See, in order to win more in the market or to win in the market, you don't need to win more. You just need to lose less. So by studying your losses, that'll enable you to learn and win more, right? All right, so that's going to be the blueprint for success. We are then the only entity with a rule-based approach that will have very, very high success in terms of win rate, but also accuracy, profitability. Your whole equity curve over time will become exponential. All right. They know you will lose. And they will accumulate as many orders out of you and every other trader to over leverage, to make you believe you're right so you can make as much money as you can and use your confirmation bias against you. I fell into that trap. I know some of you guys, if not all of us at some point, have blown or lost an account. It's because why? You were just entering and hoping you were going to be right. No, you saw something that enabled you to have a different perspective, be like, this is it. This is it. And what makes you believe that? Is it structure? Is it new confirmations of maybe support, resistance, whatnot? They know you're going to lose, but before you lose, they want to get as much out of you as possible. It's like if someone were to come up and rob you, or maybe could be more of an example, they know that you're dead, or you know that you're dead. They want to ask not just for your money, they want to get access to your brothers, your sisters, your family's bank accounts, so then they can take as much money with them, even though you're already done for. And the banks want to do the same thing. They already know that you're down. They already know that you're going to lose money. But how can I be even more evil and how can I take more money from you? By making you believe something that is not there, by inducing you to feel or act in a specific way that you would not act under in ideal circumstances. So by understanding the purpose of all moves, you are able to think outside of yourself. And this is something that I've always been good at naturally, is beginning to put myself in other people's shoes. You have to think outside of your own mindset. You have to think about, what does this type of trader not want to have happen? What type of trader does not want this to happen? Literally everything everywhere. And that's why this edge is so sophisticated, because it's not just like a one piece fits all. Yes, you're going to be learning just do this and you'll have an absolute high win rate. But again, think outside of yourself, because when you can think outside, remove your mindset into into the minds of different traders, you then understand how to think like banks, how to think like institutions, how to think like those who actually control the market. They're not thinking about themselves. They're thinking about, what does everyone else not want to have happen? And I'm going to do the opposite on every single time, from every single place, everywhere. All right. So now it's time to talk about inducement. Evolutions of inducement, mastering in different inducement types and purposes. Time for you guys to turn biggest fear into biggest strengths. The psychological analytical purpose behind inducements. Your psychological purpose, again, inducing you to believe a trend is going to continue. Inducement, every single move everywhere in the market is as much psychological as it is analytical. We want you to get to the purpose or the point. We want you to get to the point where you can understand. Hold on, y'all. We want to get you guys to the point so you can understand not just structure, but why the structure is being made. What are these different types of traders feeling at these different points in time? If you're in a downtrend, you see a new low happening, whatnot. Why is that happening? Why is, what are they thinking? What don't they want to have happen? So inducement, it's used to induce you into believing a new trend is going to continue. How does this? I'm sorry, guys. This is not, I'm trying to annotate. Give me a moment, please. Let's stop my share so I can let me do this. Play this, share. All right, let's see if this works. All right, my drawings aren't working. I don't know if they're there for you guys. But anyway, psychological purpose of inducements, right? Inducing you into believing a new trend is going to continue. Inducing you to believe a trend will continue. All traders are losing, and we are the only trader who will profit on a rule-based approach when it comes to specific inducements, specific places. So the analytical purpose, right? Any emotion that you feel, fear, FOMO, you want to enter trades too early because you don't have the trust, hoping that something is going to work out. Greed, oh, I know it's going to keep going. I got to enter many times as I can until I can't enter anymore, and then you lose everything. Or, fear of, being wrong, fear of getting in, getting out. How are you going to do that? The analytical, every move has an analytical purpose because of the factor of psychology that causes us to have those analytical errors. So the analytical purpose is presenting all the variables to use your money and your emotions against you. Again, you can only conduct an analysis incorrectly if the underlying factor is your psychology that's causing you to do that, right? If you knew the reason for everything, you wouldn't let your psychology get in the way of it. But when you don't, that's where your psychology takes over, and you can't think with a clear mind. You can't think for what things really are, and you're using your emotions to then have a bad analysis. So when you are entering trades early, man, I know this could happen, but I really just want to see, but you have a fear of missing out. You're not trusting yourself or your rule-based approach. That's FOMO. When you're holding trades longer than you should, if you think about it, what's going to allow you to think that something's going to continue and you're just going to get greedy because of it? Maybe structure is continuing. Maybe you see more confirmations. You see price accumulating to go higher. Like, oh, it's about to expand. Enter. It's greed. Believe there is a reversal or a new trend. Obviously, something has to happen before for you to then think that a new trend is going to happen. That's fear of reversal, right? Fear of missing out as well. Providing confirmation bias, causing you to over leverage and blow accounts. Hope is one of the biggest reasons why traders fail. How many times have you had your stop loss and you kept moving it down? Oh, just 5 more pips, down 10 pips. I know it needs to go down maybe 30, 40, 50. I know at some point, majority of us have done that. Again, that's literally how I did this 3.5, 4 years ago. I mean, that's all that I, would work and do. Just, one more. That's where you dig yourself a hole you cannot get out of. Because once your account's relatively big, or even if it's medium sized, it's so much easier just to chop away at your account because now you have a big axe just chopping away, versus if you have a small account and you're trying to grow it, it's going to take, relatively speaking, a lot longer. It's much easier to destroy things than pick it back and put it all together. And that's exactly what inducement will make you do. So every move in the market is pre-planned with surgical precision. There is literally no such thing as randomness, and the markets are just as psychological as analytical. And we've all heard, or you should have at least heard at some point in time, trading is 80% psychological, 20% analytical, 100% right, maybe even less. It could be 10% analysis, because what makes you a good trader has nothing to do with your analysis, virtually nothing. So if you experience, well, I know this, but I'm still not making money, it's your psychology. That's not making you a good trader. That's the difference between an analyst and a trader, is actually being able to trust your gut, trust how all these moves will happen on a daily, weekly, monthly basis, and do the same thing over and over. So we have to work on your psychology, but this one tip analytically will start to drastically improve your psychology, because you know the why, you know the purpose. It's not like there's an unknown, and you know how to start using your emotions to your advantage. And just like the markets, just like the institutions, right? Understanding where everyone's emotions are, every different type of traders, FOMOs, greeds, fears, and hopes are, we then know how to capitalize on that, like the banks. What's going to enable us? We need to develop a mindset that's going to enable us to be greedy when others are fearful, and fearful when others are greedy. Do the opposite of what everyone else is doing, and you will be okay. That's it, right? Just focus on what everyone is doing wrong, so you know what to do right. Hold on, guys. Right, let's get right into it. Inducement type 1. This type of inducement induces all traders into seeing a new trend. All right, you ready? Think we're ready? Let's get right into it. Inducement type 1. Go ahead and draw this out exactly. In 5 seconds, 10 seconds, I'm going to start explaining it. Inducement type 1. This is inducing traders into seeing a new trend. So if you've seen your BOS, right? When you see a BOS, we need to understand, in an uptrend, where's everyone's stop loss is going to be below? If you're buying right here, and you want price to go higher, where's your stop loss at? Your stop loss is going to be below a higher low. Your stop loss is going to be below a higher low. Damn it, I don't know why I can't draw. Stop losses are below a higher low, everybody. So if your stop losses are below a higher low, you need to understand that we look to buy below higher lows. If this is your structure, oh, high, higher low, higher high, do not be looking right there. You want to be looking below. So we look to buy below higher lows. Why? From the eyes of retail traders, when they see a low broken, oh, that's a BOS, right? Newsflash, it's not a BOS. A BOS is what's inducing you to see a reversal. So this is called a reversal trade for retail or SMC traders. Buy below a higher low, or sell, you see a BOS, then you're going to sell at a lower high. This is not a reversal. This is what we call a continuation inducement. It's an inducement to induce people to see a reversal trade, but we are looking at it for a continuation. So when you're in an uptrend, you identify the higher low, and we look to simply buy below the higher low with the order block to the immediate left below that. So specifically in this case, market makers inject early fear of reversal into those holding buys. So if you're in buys all the way down here and you see a BOS, you're like, shit, the market's going to reverse. Oh my God, I can't do this. That's what these buyers are being induced into feeling, fear of reversal. For those who are looking for sells, this reaction gives hope to those of catching a new trend. Sells. Oh, here's a BOS. Here's my order block. Boom. So guess what ends up happening? Both of these types of traders are going to be wrong. You see here, oh, here's my demand. It's going to get stopped out. You think, oh, I'm thinking about a supply now. I'm looking for my supply because I have my BOS right here. It's not going to work. So you're getting trapped both ways of the market. And that's what inducement is. Specifically, it's not letting me annotate, which is very frustrating because I need to for this. But specifically, you're going to have an order block over here that price mitigates for this reaction to happen. This reaction happens for an inducement when the wrong order block to the left is mitigated. If you're reacting to not the correct order block, an SMT, a smart money trap, which you guys will be learning about tomorrow, this is the move you can expect. People are like, oh, an order block's mitigated. Oh, I have a break of structure and I'm going to look here at the supply. That is not the case. If this is a wrong order block, you can expect price to focus on the buy continuations. So this is for the buys. Can I draw this? Now let's look at the sells, everybody. Inducing into a new trend. All right, so we're all good on this. We should all have clarity on this now. So I'm just going to hide this. Now let's look to the right. Let's talk about the sells now. The sells, right? The sells are what's the same thing as the buys, right? Sells are going to be the same as the buys, but in a downtrend. So when you're in a downtrend, right, you have a lower high, lower low, lower high, lower low. We need to know we're going to be looking for sells above lower highs, right? So in here, you have your last little trading range from this lower high to this lower low. We know that every SMC trader is going to be looking, oh, here's my order block. Here's my supply order block right here. That's following structure, low, lower high, expecting lower low. How can they be trapped into the wrong direction? Well, when you see this, a BOS, how many times would you be like, oh, damn, you know, this isn't the right order block. So now I guess we're going to be looking for buys. This is a BOS. Well, you're induced into seeing buys because of the wrong direction. Inducement is just a false structural break that makes you think from a retail perspective, something new is or the same is going to happen. In the type 1 example, you see, oh, a low broke a lower high. Now we're going to be looking for buys. Again, that is not the instance. When this low over here, when it mitigates an order block that is not relevant, and you see something like this happen, think, I know because this order block is not going to cause absolute new highs. It's just going to cause an internal inducement to then cause price to go lower. Again, it's a confusing concept. You're not going to get it right out of the bat, but over time, the practice, you're going to pick up on it lickety split, right? So this is that sell inducement. And that's a little note right here. This occurs after a false reaction from a counter order block. So the market makers inject early fear of reversal to those holding sells and are giving hope to early buyers of catching a new trend. BOS, oops, I'm going to be looking out for my order block here. And then you're just completely on the wrong side of the market. This is why we do not trade structure. We trade structural breaks. And that is what inducement is. Think about it. We trade structural break to structural break. And making that little perspective switch initially is a little difficult, but we're going to spend a lot of time on that throughout the boot camp, right? So everyone type a 1 in the chat if you are ready to continue.
Perfect. All right, let's go to the next. Let's view it. So what's the retail POV of these different types of inducement patterns, right? Inducement patterns. Breakout traders, right? We just hinted at it. Very, very notorious, right? This is why breakout traders are always losing. Breakout traders, they see a higher low, a higher high. When this low is broken, they think, wow, the trend's going to reverse. I'm just going to keep selling my position all the way lower. So they have their sell stops below low and anticipating new lower lows. So when they're getting triggered in at this point, they're hopeful. Yes, hell yeah, like this is going to keep continuing. This is end all be all, right? But then what happens? We know they're going to be triggered, and then what's going to happen based off that inducement type? Boom, they're going to lose their position after barely getting tagged in. So breakout traders, they're losing right here. Let's go to the next type of liquidity, right? You have your support and resistance. Beautiful, right? You have your support and resistance. Why are support and resistance traders losing? Equal highs, equal lows. Well, we already know. Well, this has maybe one touch. This is my, support. Oop, I have my support here to go higher. We know this does not happen because where are their stop losses? Their stop losses are below the lows. So we need to collect their stops in order to go higher. Collecting the gas to go anywhere, right? That's always needed. That's why support resistance does not work, as we should all know by now. Let's view now over here. Break and retest, break and retest. Why does break and retest not work? Or when it does, you'll know a specific case, right? They expect, oh, we have, bullish structure. Low is broken. Beautiful. After low is broken, I'm going to expect to retest this area, right? Sell on the retest, and then they want to go lower. When in fact, we know that's not the case. We know a couple instances, right, can happen, but for the sake of argument, price can just completely take them out, which was that third type of reaction from a break and retest. But wait, there's more, right? There's more traders who are getting stopped out. SMC. What does SMC see? Oh my God, I have a break of structure. I'm now going to anticipate price to come all the way up here to our order block, and then price is going to reverse. Well, you're induced into seeing the wrong direction. All these traders are getting the direction either completely wrong or they're initially right, but they get stopped out before the trade actually goes in their anticipated direction. So that's why all these traders are going to end up losing based just off this one type of inducement, right? And again, these are SMC traders. They see a BOS and assume there is a reversal, when in reality, it is just money being collected to push price higher. Years ago, 2.5 years ago, 3 years ago, when I really started getting into SMC, BOS was only an intent for price to reverse. It does not have to. So we need to always think about buying below or selling above structural points. Why did I mark out structure? Because structure is the most manipulated form of liquidity. All of these retail strategies that we're going through right now, notice they always require structure for their strategy. Doesn't matter if you're breakout, structure. If you're SNR, requires structure to tell you where price is going. Structure. Structure is not king. Structure is going to cause many people to lose all over the place. Sure, it can help you be on a grand scheme, right? The right direction of the trend, but you're going to get trapped in so many different little areas all along the way. So inducement is the key that tells us where multiple different types of trading strategies and traders are losing, ensuring with a specific edge, we're the only trader that's going to be profitable in this scenario. So let's go over a quick video and we're going to watch how the type 1 application works. We are about inducement type 1. So as mentioned, we look to sell above lower highs and buy below higher lows. And this is what we refer to as our false break of structure, meaning, we don't look at structure, we look at inducement, and all inducement is structure and all structure is inducement, meaning we don't actually trade structure as liquidity traders. We trade structural breaks. We trade where everyone has their stop loss. And where does everyone have their stop loss? Well, at structure, right? Because they believe that's where structure, structure breaks, it's completely invalid. Well, that's just a necessary evil that has to happen in order for price to go where it needs to go. So now with that being said, let's apply what we've learned so far. So when we're thinking about the inducement type 1, specifically as it pertains to a buy example, we know that we look to buy below the higher lows. So generally, it should be looking something like this in a diagram sense. We're going to be faced with some form of low, high, higher low, higher high, some form of uptrend. And then we're going to look for price to aggressively take out this higher low in order to go higher. So just at initial glance, initial application, what do we see kind of going on over here to the right? Well, what I'm seeing in my mind, and again, the only reason I would be marking structures to show you and help make sense of the inducement, but we clearly see that we have some form of low that was aggressively taken, right? So that we had a low, we had a lower high, now we have a lower low. Well, now this low, right, this previous lower low has now made a new high. So this now is showing us some form of, again, bullish structure. We do not trade structure, but to get you a conceptual understanding, this is how we should be thinking about it. So now let's go ahead and let's keep going. Now we have a new high, right? Now we have a new low. Now we have a higher high. Now we have a higher low. Now we have a higher high. And we don't have this isn't a higher low because it has not yet made a higher high. So right now, what we're looking.
Based on this, everybody, can anyone tell me, based per our type 1 inducement, where our inducement is? Remember that little diagram we drew, the last higher low that makes the last higher high, right? So let's see.
Yeah, his price has looked something like this. I have a new high, higher low, higher high, higher low, higher high. Based off of that inducement type 1, where do we look to buy below? Well, we initially need to be buying below higher low. So where's the higher low in this case? It's right here. Where's the higher low over here? It's right here. So this is going to be the higher low that we're going to be buying below. Now all we need to do is we need to find an order block below this higher low that has imbalance, that took out some form of liquidity, that mitigated some form of order flow. And then simply all we do is we expect price to aggressively, right, break this low and then come much higher. So let's see if there's anything over here to the left that would tell us or give us any insight as to, that would be the right option. So let's go ahead and let's zoom in here. Do we see an order block below this low? Well, there was an order block, but notice it's already mitigated. So this isn't right. Do we have anything else? Oh, yes, we do, right? If you can ever so slightly tell, we do have an imbalance. This candle right here, this last candle, if you can see, there is a gap right before it, but the gap was never fully accounted for. So this is actually going to be the order block that we're going to be looking at. And remember those core 4 features that we have discussed in day 1 of those day 1 recordings. What did it do? Well, this order block liquidated the previous candle low, and this can kind of tell us, utilizing our intuition, that some form of order flow is being mitigated as we had something in this wick, there's order block, price came to mitigate it, and then this is where price was just randomly left. And especially because now during this specific day and time, we had FOMC, price has a very pertaneous reason for just to absolutely sell off, come here. And then what are we going to expect? Well, the exact same. After we take out a low, we look to make a new high. So that being said, we look to make a new high. So that being said, this is going to become our first initial target, and our risk reward on this trade would look something like this. Let's see. The stop loss, of course, is going to be immaculate. It's going to be 1.3 pips, and our first take profit at the least is going to be right a 1 to 23, which is great. But again, we are going to be looking to target much higher. But this is where we want to start using our intuition or understanding what inducement is as we go on. But this is what we would expect. And of course, we want to be targeting higher areas of liquidity as well. So, new highs, new structural highs for price to run to. So this would be the first take profit because this is the initial higher high. And then our second take profit would actually be this high over here because we always target new highs. So this now becomes a 1 to 53, and let's see what price did. All right, so price has now effectively entered our position. TP1 smashed 1 to 23, and then absolutely just ran away. So that's a 1 to 53 breakdown in just less than a couple minutes. But now let's switch it up a little bit. Let's go ahead and let's look at sells. So if we go to GBP USD, I want us to drag our attention right over here. Again, and we can do this together. When we're looking at price over here, type inducement type 1, we look to buy below higher lows and sell above lower highs. When we're looking at price over here, this might not make sense to a lot of traders, right? A lot of individuals. Oh, it's just price, or it's just choppy. There's always sense behind it, but we have to be able to make sense of what's actually going on. So let's see what price is doing. We have some form of high over here. We then have just a random, right? Just a random low. But we need to build a story around current price action. So let's see where this low is broken in the future. Great. So this low is broken over here. So now what are we going to be doing? Well, this is now the absolute high that caused this low to be broken. So this just would become the next structural point, right? That we're going to be looking to sell above.
I'm viewing this, just so everyone knows, I'm viewing this as the overall low, the overall high, but from multi-time frame structural analysis, you're always going to have some form of internal structure as well. So internally, you're going to be able to see that we have some form of internal low, internal lower high. This is the internal lower high because this is the absolute high that makes a lower low. So this from here is a trading range for sells. So if you're viewing it from a range, you have a high, a low, a lower high, and a lower low. And this is where we want to be selling above. Yes, it's equal highs. Yes, there's a whole trend line that comes into the play as well. But this is why I'm looking to sell above this, because for sells, remember, we look to sell above lower highs that make some form of lower low. So this is our inducement right there.
And for sells, remember, what do? We look to sell above lower highs. So if we have a high over here, we have a high over here, we have a low. We have a lower high because this is the absolute highest point before breaking this low over here. So we have a lower high, lower low, and it looks exactly like we have illustrated over here. Lower high, lower low, lower high, lower low. So now that we have that solidified, the last thing to do is ask yourself, do we see an order block above this lower high? Well, yes, we see this order block right here. So that's going to become our area of refinement because we're going to be selling above a lower high. That's going to require to be liquidated, taking out stop losses. We have imbalance, we have liquidity being swept, even if it's just fractal candles, that's still liquidity being swept. And now what we're doing is we're going to be looking to set a pending limit order here, or you can obviously manually execute as well. And then we're going to expect price to liquidate this lower high and then just keep going lower. So with that being said, if this is going to be our preliminary entry, and we are going to be utilizing our stop loss, this is an 11 pip stop loss, of course, but we can actually go ahead and refine this a little bit. Maybe we wanted to go down to a lower time frame, but that would be for another video. So now after, of course, we look to get in sells here, then we just go ahead and simply target, right, at least this low. But notice, right, there's no imbalance. This imbalance has already been mitigated. So really, we're going to be targeting new lows. And then, better yet, there could be something way over to the left that could tell us price could go even lower. And of course, this is actually one of our swing plays that we did as price now, it needs to come all the way down for another reason. But now with that being said, we're going to go ahead and set our target. We now have our pending, order. Oops, well, we have our pending order, and let's see exactly what price is going to do. Now notice it misses, right? But then guess what? It comes right back into it. And what do we expect price to do? Just absolutely sell off. Just go all the way to the ground to our take profit all the way low. All right. All right, everyone. So that is our example for our type 1 inducement. Now what we're going to be going through is a few applied examples based off of what we just learned. Again, it might be initially confusing, but I promise over time you're going to have a very clear understanding to what price needs to do. So like we just went through with the previous, we're just going to practice, okay? So what I want you guys to identify first is where are we trending in this instance? Everyone identify where we are trending. And let's all stay on the same track too. Awesome. So we know that we're trending higher. Beautiful. The next thing I want you guys to identify is now, if we're trending higher, where do we look to buy? What is our inducement? What's going to induce traders in the opposite direction? Boom. Juma got it right. Awesome, everyone. Awesome, right? Great. And then, of course, the order block line after you guys have identified it. So it's going to look like this. For structure, we know that we have our, we have our high, higher low, higher high, higher low. Don't get ever caught in this. Oh, so order block. No, there's no liquidity before it. No, right? Especially, oh, here's a whole trend line too. Oh, it's not going to work. Very many reasons why it won't work, right? So now you've identified your inducement, which you need to master structure before you can understand inducements, because if you don't know structure points, you're not going to know the right inducements, right? So after you've identified the inducement, where's the order block? Of course, our order block is right here, just thereafter. And then what do we expect? The target, we expect it to look exactly like the diagram, breaking a higher low to then make a new higher high. It'll look exactly like this, of course, with other entry refinements. Great. So that should start to make a little bit more sense now, but still very surface level. So now what we're going to do is the exact same thing, but in the opposite direction. Go ahead and guys identify trend. Mark the structure points in this case. Everyone identify the structure points rather than the trend itself. Everyone, do it together. Awesome. Right? Awesome. So now let's see. Structure point wise, remember, you're going to have the structure itself is something spent a lot of time on. We already have one video up in the community. I'd put that on pause for the complex, because structure, it gets very analytical. There's multi-time frame structure, and that's important because as we go through different types of inducements, you're going to realize why. But as far as the most obvious, right, we have some form of high, low. We have a pullback, and then it makes a new overall low. Is this structure? Yes, but this is all just structure inside of our main leg. That's internal structure, because we learned about that, right? So this is that current structure that we're identifying. So where do we want to sell above? Where is the inducement, as you guys have already identified? It is right here. This is our inducement. We look to sell above this high. More so because guess what? There's no order blocks over here that are left unmitigated. This order block has been mitigated. This is done. This is mitigated, right? Just caused a small reaction. We also have a trend line over here. We know that a trend line can get taken out, but there's no order block. So guess what? None of that is valid, right? So now that leaves one area for an order block, and everybody, where is the order block then? Right? Boom, just above. We have all these equal highs over here. Imbalance takes out liquidity, mitigates a previous order block, indicating order flow. And then that's where we are going to look to take our position. Order blocks that lie at inducements don't work ever.
This will not work because it's also lying at equal highs. It won't work. We want to sell above lower highs, right? Above lower highs. This lies at liquidity. It's not going to work because we have all this over here as well. Just to trap a fake order block and a smart money trap again tomorrow. So then all that's left to do, take out a lower high, target a lower low, and then boom, right? So on and so forth. Oops, let me see here, y'all. 1 second, I got to do this. Let me clear. I'll keep pausing it because some of these annotations are messing up. Let me go over here. All right, so this is the last thing you guys are going to identify right here. Based on what we have current access to, where are we trending generally? Up or down? We're trending down, right? Boom, we can see we're making some form of lower highs. So we're trending down, awesome. Now we want to identify now, if we're in a bearish trend, identify the lower high we want to be selling above. You know what? This drawing actually cut off, but let's see. I think this was an error over here where I drew this box, but let's just see, right? Let's just see. Clear all this. Beautiful. You guys identified it correctly, right? Awesome. Little tricky, right? But we see that we have what? We have a lower high right over here. We have a lower high. We see some form of structure break, lower low. We see a lower high, structure break. We see a lower low. What do we look to sell above? We look to sell above lower highs. Well, where's our order block above this lower high that makes, right, this lower low? Where's our order block? Order block is right here, remains unmitigated, and boom, easy as that, right? Easy as that. Take out a high, and then what do you expect? New lows. But guess what? Is there any imbalance? Nope. And that's something you'll be learning on day 3. Now we know that we can target all the way down here. So this is inducement. But guess what? There's more. We don't just stop here. You're going to be learning how to catch this. You're going to be learning all that, right? So it's still a tip of the iceberg, as Antoine said. But that's exactly how we approach the charts. One setup for one inducement. Lovely. All right. Now we're going to get to the second type of inducement for today. Go through a couple examples, and then we are going to end off the day with the plan. All right. This type of inducement is our second type and induces traders into seeing a continuation. The type 1 induces retail to see a reversal. This induces to see a continuation. So we could maybe imagine what that looks like. This occurs when SMC retail gets trapped on the lower time frames and fails to see the higher time frame. Go ahead and take a second to draw this out, and then I will be explaining. Inducement type 2. This is where you will always get trapped on the internal trend. Type 1, we were talking about the main buying below higher lows to then go higher, right? This is different because this is when structure will actually maintain. Because if you see we have a higher low over here that makes a higher high, notice it actually ends up coming to the higher low
and then going higher. Where's the inducement in this case? The inducement is when you have traders who are stuck on, it doesn't matter if it's the 4-minute, the 4-hour, anything all in between. If you're focusing on structure, but you're failing to acknowledge that it's a part of something bigger, you're getting trapped on the lower time frame, relatively speaking, and that could be any time frame. So what happens when you're seeing all these, oh, here's my lower low, lower high, lower low, you're seeing this as a lower high, lower low, and you're looking for your order block for sells right here. But you're failing to understand that you are a part of a bullish trend. So this is where your inducement is right here. Your inducement is literally structure. SMC traders wait for, oh, here's my order block, here's my structure break, here's my entry to go higher. This is where you will lose. The inducement, our trigger for entry is inducement. We get in before the move happens because we know where it's going to go. We don't need a confirmation because inducement is our trigger for the right order block. It validates it for us, not a BOS. So our inducement is right here. An internal lower low, trapping all the internal trend traders. After that lower low happens, what's simultaneously going to happen is it's going to be mitigating our order block. So we look to buy below higher lows for type 1. We look to buy below lower lows for type 2. You're always going to be buying below higher lows and lower lows. And here, what does this inducement mean? It induces hope for those who are hoping that you're going to continue sells. It's inducing fear, or it's inducing greed for those who are holding sells. I want to keep stacking on my positions, new lower lows. It's inducing FOMO for those who might think, well, damn, I had the wrong order block. This is where I want to enter now, right? It's inducing all types of traders in these different regards. So inducement is just structure, but tomorrow you'll be learning exactly which one. Because now you're probably wondering or asking yourself, how do I know if I'm going to be buying at structure or buying below structure? Good question. So you're focused on the internal trend in this case. In this instance, what happens is price to the left will just mitigate some form of order block that's not sell structurally supported. It's just going to be there random. And it'll cause price to come back down to your extreme demand order block. And this is going to be your inducement that you're going to then go higher. So essentially, you're just going to have some form of low internally within your main range that's broken to then finish your main range target. All right. Now let's look at the cells. I'm going to cover these up to the left. And let's take a look at the cells. Sells, compared to where we're looking to sell above lower highs in the type 1 example, sell above lower highs, right? In this example, we're actually saying that we are going to be selling at lower highs. We're selling within a range rather than selling above it and going lower. This only works when you have some form of high built before it. It's going to ensure that those who are looking, oh, we have a high, a higher, higher high, now we have a higher low. These traders are getting trapped on the internal time frame. And they're seeing this, oh, here's my higher low, here's my higher high. Where are they looking for order blocks? Those who are buying. Here's my order block, that's going to be going higher, right? Again, this happens inducing traders to believe the buys are going to continue to mitigate the main sell to then go lower.
So all type 2 inducement is, again, is inducing traders stuck on an internal time frame to a main leg, getting stuck on this internal time frame. They're just going to be trapped into, right, the wrong direction. And that's why it's so important that we always zoom out and make sure what the actual bias is, so we're not getting, you know, caught up in this BS. So the inducement is selling above a higher high. You're only going to be selling above higher highs and selling above lower highs. That's it. Always need a high to sell above and a low to buy below. Everyone type 1 in the chat if you're ready to continue. So we go through these few examples, the video, a couple examples, and then the plan. It's 1:48 right now, so I would say 20, 25 maximum minutes. Awesome. All right. Clear this, and we're going to move on to the next. All right, let's watch this and then go right back. So compared to inducement type 1, type 2, we are actually going to be selling above higher highs and buying below lower lows. So compared to type 1, as you have now just seen and been illustrated, if you're looking to sell for a type 1 inducement, you look to sell above lower highs, right? But if you're looking to sell in type 2, we're actually not trading continuation structure, but we're rather trading the continuation structural breaks to allow us to go lower. Same for the buys. When we're looking to buy, we're going to be looking to buy below lower lows, or in an uptrend, we look to buy below higher lows. So these are the two types of inducements. Now, let's see how it pertains to where price currently is. Well, what we can kind of see is that we are looking somewhat bullish right now. We have new highs taken, which is great, but let's look at where price currently is now. Based off of that type 2 scenario that we had just pitched, where we look to buy below a lower low, my question would be, well, where is the lower low, right? Where are we actually looking for a lower low inducement? Well, right off the bat, we can tell that we are going to be actually looking to buy lower low inducement. Well, right off the bat, we can tell that we are going to be actually looking to buy right here, everybody. Let's think about it. Why am I looking at this low? Can you guys map out, again, if I'm saying over here to the left, we're bullish, that means internally, these are sells. So draw out the structure that tells you this is the right low we're going to be buying below. If you guys can go ahead and illustrate that real quick. And make it make sense. Focus on all of the moves in between. Draw out the structure. And Mr. Constantine, you'll see yourself. Can't start there either. You got to start all the way from the left. Remember, everybody, we want it to look like we're selling within a main range. We want to identify why this is an inducement. If you're drawing everything all in between, guess what? Like this, that's not telling you anything. You want to make it look what is we're going to buy below. So really, I mean, as you had some people identify, your structure to make it look like this, right, to sell below, you can't do this, right? Because notice this isn't telling you anything. This is literally not telling you anything about except other inducement. What you need to do is, all right, well, I have a high, I have a low, I have a lower high, I have a lower low. Again, main structure, because guess what? Within here, yes, then you're going to have all this, crap which again, more inducement comes into. But just wanted to get you guys to understand that I'm viewing this main bearish leg as the internal continuation for the inducement for then us to sell or for us to buy afterwards.
Liquidity in order for us to go higher. Well, if you look to the left, do we see any order block right here? Well, we do have an order block, and where is it? This has been mitigated. This has been mitigated. This is the only one now that is left unmitigated. We do, of course, have an order block here, but why is that not right? Well, because we have an imbalance just below it. So this is going to be the order block that we're going to be paying attention to. So our refinement is going to come from this order block right here. And again, it always takes out some form of liquidity. It has a minor imbalance after, and that's where it needs to come back and fill. So now this is acting as the gas or the money that is going to be collected in order for us to go to the new direction, or to target, new seller, right? To target new stop orders, new instant on the contrary. So when we're in our long position, we can go ahead and just put our long position here. And this is a very tight stop loss. As you'll begin to understand, our stop losses are really no more than 3 pips. And mind you, we're not doing our refinements right now. We're getting the concepts down. So where now do we target? Well, we look to target other areas of inducements or other areas of liquidity. So when we're looking over here, do we see any type of liquidity? Yeah, right. We see some form of relative equal highs. So we should be targeting at least, right, this high up here. And that becomes a 1 to 25 pretty quick. And let's just go ahead and see what ends up happening. All right, so price just immediately tapped right into our entry after collecting these stops, mitigated that order block, and it should just absolutely flip.
And all in the meanwhile, everybody, you're going to be able to tell the different types of liquidity here. If you have this, guess what? That means what order blocks aren't going to work. It means this one won't work. Why? Because you also have over here another key zone, right? Over here, you have you have equal highs, also another key zone. That means none of this is going to work. You then have a trend line, which tells you, what about trend lines? Well, we know that first point on the trend line at least needs to be taken out. So it should at least come up to here, and so on and so forth. I mean, it's always going to be, the same. Always, always, always. It's always going to be the same as the meaning on, how price
Flags moves, because this is where all the next area of liquidity is lying. So as you can see now, what price is doing is, of course, it's retracing just to come mitigate another order block so it can then absolutely take off. So this now has become a very quick 1 to 25 RR. And of course, we know price always has to have pullbacks on between, and you're going to come to the point where you can know exactly where it's going to pull back, how far it's going to go, how it's going to get there. And this comes with being an exceptional mastermind, having that skill set. And as soon as you notice, price immediately liquidates it. That's 110 pip return. We have a 1 to 25 RR and phenomenal trade. But now let's go ahead and look for sells, right? So when we're in this scenario, let's talk about what we currently see going on here. Well, we look to sell above higher highs, right? Or we look to sell above highs. So that tells us, just based off of this scenario, that we see, of course, one high over here, but we also see an internal high, right here, because this is that last high that made the new low. So they tell us right now, what we know is, because we look to sell above highs, price is going to be looking like this, right? We look to sell above a high into some form of order block to the left, and then price to go lower. Well, do we see anything above this high right here? Do we see an order block? Well, there was one, but it was already mitigated. Where's the next order block? We do see an order block, right? There's an order block that is right here. So when we see this order block, this actually is going to become our entry. There's gas lying for our order block that's going to induce buyers to come into the marketplace. And then that's when we're going to be looking to sell. So if we go ahead and place our nifty tool, when we come to this area, now again, this is a much larger stop loss. We can refine it, but it's about the concept right now. Where are we going to target? Do we see any form of target that we would look for? Of course, we see some equal lows right here, right? So this is going to become an immediate target. And again, the RR, it's phenomenal pips, but the RR isn't great. We can refine this more so in the future. But now this is going to become at least a minimum target. But what we can expect is ideally, we're going to be targeting even new lows, right? Our TP1, our TP2, and then price will inevitably continue to go lower and lower and lower as we continue to take more liquidity and we build more liquidity for it to target in the future. So with that being said, now price should just absolutely sell off. And we're just going to look for price to do its thing, trust it, because we know the purpose, we know the intention. And when you understand what's going to happen everywhere, all the time, this is where you really start to develop that mastermind mentality, that mastermind approach. So again, order flow, order block, order block, order block, and then we'll of course get that release. And notice how it did exactly as the operations, exactly as we said it would, to the minimum. And
All right, and that is this approach, everybody. All right. So let's see here. Got a few more, and then we are good to go. So let's just practice some of these examples. So I can get them to load up here on the screen. All right, everyone. So based on this, right, what you want to do is mark out the inducements. Where are the pending highs and lows that need to be broken? So go ahead and identify the highs you would want to sell above and the lows you would want to buy below structurally. So just go ahead and take your best bet where you want to sell above, buy below. And don't wait for other people to go. Just do your best and let's see what you guys can come up with. And remember, think about inducement, right? What's the immediate high? What's the immediate low? What's the larger previous high, the larger previous low, right? Again, structure tells you everything. All right, so let's see. Great. All right, everyone stop drawing on your screens. So let's see here, right? Inducement wise, right? Let's think about structure. We see that we have our main structure. We have a low, high, higher low, higher high. Boom. And then guess what? We had a shift from a high. It's now a new low. So based off of this range, where are the buy stops and the sell stops? Where are the pending structural breaks that price is going to come to based on the current range? Right? So based on the current range, we want to be selling above this high or buying below this low. But when it comes to a type 2, right, if we have a new range, which is right here, now what do we want to focus on, right? What does a type 2 inducement look like? It's some form of high that forms internally for then it to come to attack the main range. So rather than getting gas from above the range like it does in type 1, the type 2 inducements will maintain the current trading range from the lower high to lower low, and it's going to build gas internally. Again, a lot at that, right? A lot of gas internally. And it's just going to cause price to take it out to go lower. So there you have it. There you have your you have your main range. And then of course, within your main range, you're always going to have your internal range as well. Again, right here, if we had to draw the internal range, what does this look like? Well, you have internal BOS, internal high, internal low, internal lower high, internal lower low. Where is this broken? Broken over here. So now you have this low, and then you have, right, a new high. So now we know based off of this, we're taking out a high, and these are the last two liquidity points. Selling above this high, buying below this low, or selling above this high and buying below this low. So when you can understand inducement, it's actually going to create the pathway. It's telling you where liquidity is. We know where it's been. Now we want to figure out where it is. Now that we know where liquidity is, above here, below here, above here, below here, the pathway is already figured out for us. We know in order for us to go lower, we have to collect gas higher. We have to induce higher to go lower. Write that down. Induce higher to go lower. So we have to take out a high to induce buyers to then go lower. And we know lower, we're going to go here and to go lower. And then it'll just rinse and repeat the entire process. And you're going to get to the point where you'll be able to understand every pullback, everything all in between. And as you guys have all identified now, perfection, right? Boom, boom, boom. So it's all very logical, always the same thing. And in these examples, I didn't illustrate structure. This was made way back when just to illustrate the concept. But now after realizing this from the boot camp and then you're like, oh, inducements, you have to actually understand structure to understand inducement. Because if you're marking the wrong structural points, you're not going to understand the right inducement points because inducement and structure are one and the same. Great. We're gonna do one more example and then last thing. So over here, like we just identify the main leg, the main structure inducement, and then the internal structure inducement. So where is the liquidity? What low and what high are liquidity above? All right, so let's see what you guys said. Exactly, right? We know that the liquidity is below. We have high, low, lower high, lower low. If this is a type 2, this is a type 2. What does this say about our main trend? Are we looking for sells or buys? If this is the type 2, sells or buys? Boom, right? Because we know the main trend is here. So we know that we have liquidity above this high, below this low. Internally, we have liquidity because this took out a new low, exactly as Mr. Juma illustrated. Now we have liquidity lying above here and below here. So now what's left to do is where's the order block? All right, and exactly as boom, that's it. You're taking out internal gas to then target your main high. And more so, we can know that price will come to here based on what? All of these equal highs, right? So it all kind of ties together, but inducement is a very algorithmic way of doing things. Buy below a low, target a new high. Buy below a high or sell above a high, target a new low. Rinse and repeat. Now keeping it surface level, right? Just so you guys can start to practice the application. But you need to know structure before anything else, right? So let's see here. All right, now let's do one more example. Last one. Ready? Everyone identify the last relevant structure points for inducement. So what high would we look to sell above, and what low would we look to buy below from the main structure, right? So good. Clear all drawings. Clear all, no mas. Boom, we know we're going to buy below here. Again, this is not a solidified higher low until it makes a higher high. But the reason we're saying this is because we have a high, higher low, higher high. This is our main range. But within our main range, again, if we're looking for buys for a type 2, we need to see some form of internal low to then go higher for it to look like this. So now that's the inducement right here.
Where is the order block? All right, and let's put it all together. Bingo, right? And then it tells you exactly what price is going to do. Then price takes out this low, right? Where's now our new liquidity? Above here, below here. So guess what? You can know with very high confidence it's going to come all the way back up to here. But more so because we have all of this equal highs. Oh, I have an order block right here. Okay. So what? Ooh, maybe just a small pullback, go right through. Okay, because it makes sense. You know, you see what I'm saying? It has to make sense from the perspective of like liquidity logic. If it doesn't, it's not going to work. So then again, oh, here liquidity, and then boom, ends up working, right? Awesome. And that's what it comes down to. Again, very surface level, but these examples are meant to really show you how to apply these. And if you feel like you're not understanding, don't worry. It's only a matter of time. Practice. And this is still day one. It'll all come together over the next few days, right? So let's see here. Let's get this one. And the last type of inducement will be saved for tomorrow. With that being said, everybody, let's look here. So guys, in this section, you guys have learned, again, why structure is not king. You learn why all these different types of traders are losing, because now you're starting to think from a structural break perspective rather than a structural bias. You're not thinking about, oh, here's my lower high, here's my lower low, here's my order block. You're not going to be thinking like that anymore. You're going to be thinking rather that you have, all right, I know that this will be valid only if I see we have some form of structure that needs to be broken into here, and then you're going to target another structural break. So you're trading structural break from structural break. And that's one of the hardest things at first to switch your mindset to think is structure break to structure break. But once you see these patterns, especially after this slide, that's the last thing of today. I'm going to tell you guys the best setups to only trade. Only trade these setups. And that's what I know everyone's waiting for. All right. So let's see. So the last block, structure, liquidity, inducement together for the highest probability setups. We're going to have a 5-minute break, and I'm going to go over 10 minutes with you guys here, and then we're done for today. So it's an A to Z plan right here on this next slide. So everyone, we're going to take a 5-minute break. Go ahead, get some water, go to the bathroom, come back, and then we're going to end off today. Right? So 5 minutes, 5.5 starting now. So at 2:15 EST, you guys are free to leave. All right, everyone, we're going to go ahead and get started here in just a minute, and we're going to spend the last remaining minutes going over it. All right. So go ahead, if you can hear my voice, head back to your seat, and we're going to finish off day one. And just so I can get a gauge, as soon as everyone is available or back rather in their seat, just type 1. We got 32, so we should have around 30 people ready. From previous boot. All right, the highest probability setups. If I had to encourage you guys to only trade the same way over and over and over, this would be the way I would encourage it. From previous boot camps, it was approached as in you can take anything everywhere. While you hypothetically can, right? And while you really could, that is not the point of trading. The point of trading is to make money.
It is to do it in a consistent way. And the only reason I approached that you could trade anything anywhere is to let you know that there's virtually no limitations to the knowledge that you can exercise on a daily basis. But being consistent, that everyone aspires to be being consistent, you need to do the same things at the same times, at the same places, everything the same. That's the only way anyone will ever be consistent, regardless of the strategy at use. And that's where this boot camp is different from the other ones, because there's almost information overload and cutting out a lot of stuff and making sure you go through the course, you have the understanding, because how it was first posed is, wow, I might not know anything. And now this is like rocket science, in all honesty. Like it's a lot. So at the end of each day, or at the end of the respective sections, I'm only going to be teaching the best of the best, because that is what you guys want. If you guys want perfection, this is not it. If you guys want profitability and scalability to grow any sized account, to get funded, then start making those withdrawals, this is the way to do it. And the two things just from the day one that I would emphasize: only trade the same patterns, the same setups. Two of my favorites, again, extremes, always the same. So I want you guys to draw down these setups and copy them after me. Inducement type 1. Again, in an uptrend, it's going to look something like this, right? And then do an extreme with a type 1. What this is your structure that you're going to have right here, your high, higher, low, higher, high, higher, low. You're going to want to look to the, not the extreme, not right here, but a type 1. Remember, type 1, you buy below higher, low. You want to buy below this higher low and identify the order block just below it, right? Just below it. And you know what? Let me step back. One thing I forgot about here, right here. Draw this out and show you guys more so. I wanted to draw this with you guys live so I could do this right here. Your setups, you want to follow 4 things. You want to follow order flow, institutional order flow. If you don't know what order flow is, rewatch the May Bootcamp video. Also talk about it all the time. Rewatch the May Bootcamp day 1. Order flow, inducement, extremes. Those are the 3 things, 4 things that you're always going to look for. So over here, in a case like this, what we love and need to see is changing colors on this chart right here. Sorry guys, it's taking me just a minute. Try to make this as clean as I can for everyone. I would take these setups all day and I would be thrilled if this is all that if this is all that you guys would trade. Order flow, when you have an extreme, a higher low that makes a higher high, you have your extreme, price comes to mitigate it right here. Mitigation is intact. We know that this indicates institutional order flow. If you don't know, well, now you do now. This low has been mitigated, right? So money is transferred from here to now this order block over here. And this order block at this point in time remains unmitigated. So what happens is this actually becomes an inducement, and this is the order block that we want to focus on. So in looking at this, we need to realize that this is our inducement. We want to buy below a higher low to the real extreme. That's going to cause price to then go higher. And this is what we really, really, really want to focus on, is this exact setup right here. This exact one right here. This is what you focus on. This is my first favorite type of setup. Happens every single day, everywhere. And this is for a buy model,
Right, so go ahead and draw this for your first setup type. Constantinos, how do you know if structure is going to be respected or rejected? All tomorrow. Because you're like, well, shoot, now not a BOS. What do I do? Do I look for order blocks here or below? It's going to be one or the other. With that being said, this is my first favorite type of pattern is the extreme type 1. It's not this extreme, right? Yes, that's an extreme, but an extreme for a type 1 scenario requires the low where an extreme would be broken. It requires it to be broken, and the order block just below is that extreme. So everyone type 1 in the chat when you have this drawn down, and then it'd be great to save time if you guys want to inverse this drawing because it's the exact same in the opposite way. Perfect, right? So this is our type 1. Draws for the buys, just do the inverse for the sells, right? Awesome. Type 1. Now, it's my first favorite setup, and we'll look at that in a minute. Type 1. Type 2 is my next favorite, which, again, these are the 2 highest probability out of, 6, 7, I don't even know how many, right? This is my next favorite one, and this works the absolute and the best. Let's do the sell instance in this scenario. When you see price selling, you see something that looks like this. Order flow is key. If you only trade order flow, you'll be order flow rich. That's all you got to do. So here, where is our bear structure? Well, we know where our bear structure is. We have low, lower high, lower low, lower high. So this is our current range, right? The difference between 1 and 2, remember, is 1 requires a range to be broken. Type 2 tells us that the range, in fact, will stay intact, right? So in this point, we know that this is our current range from this lower high to this lower low. Again, how do you know if it's going to break the range? Tomorrow. What do we look for here? Same thing that we just talked about. Order flow. You have a lower high, you have a lower low. Boom. This lower high that makes lower low comes back, your extreme is mitigated. Following the money, this order block, because it's been mitigated, it has transferred from here to now an order block within here. So in order for this order block to be valid, it's not technically valid at this point in time, because what validates order blocks is inducement. If you don't have inducement before your order blocks, it is not a valid order block because your order block is the liquidity. So that's what this looks like. So in a type 2 scenario, you'd be looking for something like this and like this. We look to sell above an internal type 2. Price to come up to mitigate it, and this is our bingo entry. And then we expect price to sell all the way down. If you can only follow these, your win rate will be absolutely insane. Absolutely insane. And this is how I would emphasize anyone to trade. If you're listening to this, and if you do not choose to trade this way, okay. But just know this is the best way to trade. These setups that you're going to be learning. Now, as far as specifics, you'll be learning a ton more. This doesn't even scrape the surface. But this is how going forward, I would just focus on these. Just focus on these. So let me know when you are done with those 2, and we'll go on a couple examples and then end today. Once we get 20 likes on that, all right, we're about to check it out right now. So let me go over here. Replay. Damn, this thing is crashing on me. All right, so let's go investigate. Let's see what we have, right? So let's go over here. New share. Right. So let's go over here. Let's look at that type 2 scenario, right? So in here, what we're going to see is where we have, from a structural perspective, always mark structure before inducements, because if you can't mark structure, you don't know inducement, right? So here, structurally, what I would say is I say, all right, over here, we have long-term. Yes, we know that we have some form of low, lower high, mega lower low. So it tells us one of these two ranges is going to be broken, right? And tomorrow, all of these are going to be pre-analyzed. I wanted to share this with you, especially with the time right here. So we know one of these is going to be maintained, right? So following this, we need to know that price can come up here to mitigate something, and then we can continue lower. Besides the point right now, well, I'm just trying to emphasize the actual range. Looking where price currently is, internally, we can see that we have some form of high, higher low. Where's this high broken? It's broken over here. So we have a new high, a new higher low, because it causes a pullback, but then price doesn't stop until it gets up here. So then we have our higher low, then our new higher high. So as far as liquidity, right? Liquidity is below this low and above this high. Great. So now that we understand our range, we have a low and then we have a high. Now we need to figure out within the range. We know there's an inducement above here. This was just collected. But now we have an internal range, right? So now we need to identify our internal range. In our internal range, we said we have a high, a low, lower high, lower low, lower high, and there's no pullback here. So I would just say, then we have a lower low somewhere, right? So now, and again, this might be confusing, like what I'm just showing you the best setups to trade, right? So I would say, all right, now we have this lower low or lower high, we have this lower low. Where price, the range currently is, that means it can either break the range, which would be a type what inducement if it decided to break this. One. This would be a type 1 inducement, everybody, right? This would be a type 1 because we are going to be selling above a lower high to go lower. But like we talked about, we have two scenarios. We can either sell above a lower high and we see the order block right above it, or what we can do is the opposite. We can actually say that the range is still currently valid like we have, and we just need to identify the order block, which is where? Isn't our order block right there, right? So this is a valid order block here within the range. Within our structural range, we have our order block right here. This would be an extreme type, potentially 2. And then our extreme type 1 would be the extreme above the lower high, and the order block is right here. So now we only have 2 order blocks, right? Now what we need to see is for this order block here to be valid, we need to see some form of type 2 inducement to sell below. So let's go on, 1 hour. It doesn't even matter what time frame we go to visit. Based off of internal structure within this wave, again, there's multi-time frame. You guys will be able to master this. This is just a boot camp. So this is our main leg fractally. We're going to have internal structure within. So you might have, all right, you have a low, lower high, lower low, lower high. Let's see, lower low, lower high, lower low. At this point in time, do we have an inducement that validates this order block? Type 1, right? We do have some form of, we do have an inducement right here that validates it on a lower time frame. We're going to learn this type tomorrow, but we do have an inducement that does validate it. But let's see if it actually builds another one before it mitigates. Oops, I just wanted to wait for that. Here. TradingView might be giving me issues today, y'all. I don't know if I might have to do this for tomorrow. All right. So now what you see is we have now a lower high, lower low. We then have a structural break. Now we have a low that makes a new high. So right here at this point in time, we have a type 2 inducement that we can be selling above. So this validates our 5-hour order block. Oh, here's an imbalance. Yes, but what you guys are going to learn is the only order block that needs to be mitigated is the highest time frame. And later on, you guys can also refer to the video bootcamp. So this does verify our order block now, right? Because we have our main cells. Price will then come up here. All these internal traders are going to be, oh, now we have a higher low, higher high. It's going to mitigate, and then we can expect what to happen, right? The skyfall. And this would be that type 2 inducement, especially because it's this over here, mitigated. Order flow here, order flow, and then price will then establish more here. And we see it come all the way up and then drastically sell all the way off. But again, this is just at a glance, nothing in-depth breakdown right now because we're just going through conceptuals. So now we can do the same thing on the counter side. Let's go over here. Let's look right over here. This is actually a trade that I called a couple weeks ago. Over here. Sent this to the students. So much for hiding it. But here, right? Extreme play, extreme type 2 for the buys. We have a low. We have a high. We know that liquidity is going to be above this main high, right? This is a high, below this low. But also, based off what we just went through, we have internal liquidity as well. So where does that lie? Well, we have a low, a lower high. Is a low broken? No. So this is a type, at this moment, it's a type 2 because we are buying below a lower low. That's going to be broken. And where's our order block? Right here. That's our order block. Based off of that, we're going to collect this low gas, collect the low into our order block, and then price will then run away. And that's exactly what happened. For then price to come and mitigate, right? And that was actually like a 350 plus pip move just to here. Yeah. And that's what we call. But what I'm saying is if you only take extremes,